This is the master class on finance, so I hope you're all financial geeks, because this is the stuff you will love. It's at a pretty high level. If you have any questions, direct them to Dan. Dan Staszak is a member of the board of the Eldorado Community Foundation, a CPA with Staszak & Company down in Folsom. I've known Dan for, it seems like ever. He has served on a couple of nonprofit boards. His bio's in your packet. He sits on our finance committee and is the finance chair. And I think forever.
This team feels that way.
I'm sure
we didn't talk about
that way. Yeah, the terms of board members of the foundation is 9 years, and then we just keep renewing it until we exhaust them and then they retire. So I want to thank Dan. I want to thank all of you for being here.
Thank you, Bill. All right. Well, appreciate that. Yeah, I've been on the board since 2016. And when you're a CPA, where did I plug you in initially when you joined the board? Treasurer, right? So I've been in public accounting since 1986. I would call myself a lifer. I got out of college, got my CPA license, worked for a firm, did audits for a few years, realized that's probably not the direction I want to go, more focus on business and tax. But have worked with nonprofits pretty much throughout my career at some level, either as a committee member, board member, or as their accountant. Yeah, so I've been 37 years later, and time has kind of marched on. So, and I'm just thrilled to be here with you guys today. Now, how many of you took? Now, Sakina had done a class about a year and a half ago. How many of you guys sat through that? Did that class? Let's go. Oh, good. Okay. All right. I don't want to repeat. I think she did an excellent job. She covered some great concepts, so I don't want to go over stuff we've already been there. But I want to get a feel for what you guys have already taken. So. All right, cool. Let's get to it. So here's some of the things I'm going to talk about today. I'm going to do a nonprofit accounting overview. How about financial statement review? How many of you have an audit for your group? Most of them all. That's great. All right. How about fraud and internal controls? This is quite one of your favorite topics, right? Is that a question? Is that an affirmation?
Do it. Yeah.
I'm sorry, explain what you do when you say fraud. Income tax filing issues. How many of you do your own 990s without having a professional do it for you? Okay. What about grant accounting and reporting issues? What about cost accounting, indirect costs, direct costs? How you guys allocate costs to programs? We'll look at the statement of functional expenses, and I'll get some input from you guys. It seems like there's no one way, lots of ways of looking at direct and indirect costs. And we'll talk about what administrative costs maybe should look like, and then have a discussion about best practices. What are some things you guys should be taking back to your nonprofit? How can we help you improve what it is that you do? And this is a small group. I'm hoping you guys can help me here. Don't let me talk for 3 hours, please. Only for your sake. All right. So a software company did a survey, the biggest challenges affecting nonprofit accountants. I listed them out here in no particular order. But the first one, anybody feel like the person on the left? It's been spread too thin, right? And as accountants, we feel like we can take on anything. We're like, no, it's just not in our vocabulary very often. Yeah, I'll do that. No problem. I can take care of that. How often do we get in positions where we wish to have other people doing some jobs for us, right? And sometimes advocating for yourself. Do you need additional help in accounting? Do you need additional volunteer work to help you? It's sort of, a little bit of help can go a really long way, right? But consider avoiding this whole reverse delegation. It happens in my office all the time. What about grant tracking? Is that a challenge for you guys? Is every grant a good grant? You ever say no to grants?
Yeah.
For a good reason, right? Maybe it's not appropriate, too many strings attached. Is the juice worth the squeeze, right? And funding sources. How involved are you guys as a finance officer in securing new sources of funding for your group? Are you involved in the grant writing process? How are you identifying new opportunities, so to speak. I want to avoid making too many connections to for-profit companies. Right? It's a little different perspective, and we'll talk about that. But how are you guys involved in the long-term sustainability of your group? And how often are you left out of a discussion on something going on that you probably should have been made aware of sooner than later, right? I get this more on the private side. My clients say, "Hey, guess what I did?" I'm like, "Oh, what now?" The phone rings both ways. You're allowed to call me, all right? Or email me, or just give me a sign, right? You can't always unring the bell if they're going down a path that you probably think they shouldn't have gone. So what are some things you guys face? Am I hitting all the points that you guys have problems with, or what's on your roll?
I think the biggest challenge we have here in South Lake is we're not finance officers. Most of us in this room are CEOs, so we have to wear multiple hats.
I see. So you're doing more than just one part.
I don't know any of our nonprofit. Do you have a dedicated finance person?
We have
A specialist.
Specialist, okay. Nice.
Split
Yeah,
capacity
but also
too. Yeah.
speaking, I mean, I came from a different background, moved here, I came from corporate, so it's and more on the software implementation side, so I know finance systems, but.
And that's super
implement the
important,
opposite.
right? And we'll talk about a little bit about IT and a little bit at the time with internal control. Super helpful with nonprofits. A lot of times that's a weakness, that's a blind spot for them. It's from the IT component and how that sort of integrates with their financial reporting. What else? What else is affecting you guys?
Just to follow up on that too, I would love to hear, even go around the room and see what everyone's role is in where they are with the finance, because again, I'm the executive director, but,
Well, why don't we start here?
so I'm the executive director of the Lake Tahoe Community College Foundation. So the college was handling the foundation's accounting. Then we had turnover with COVID, and then somebody stepped in who didn't know what she was doing and didn't ask for help. Giving too much information, but kind of a good thing.
We have 3.5 hours, but we're
I
You're gonna land
can
plain
about
soon,
this. What we ended up doing is outsourcing our accounting. So now we have an accounting firm, outside accounting firm that's handling the foundation's accounting. And we have a person in the college's accounting department that kind of is our point person, but she doesn't know nonprofit accounting. So it's been an interesting process. And one of our challenges is our endowed scholarships and the movement of money, tracking that and how to track that on balance sheets and everything. And I don't have a finance background or accounting, kind of learning.
Right, and then you use an outside company, outside firm that hopefully guides you in some of that. And they have some limitations in what they can tell you.
Yeah.
But yeah, that's a great opportunity to leverage someone else's talents, and you don't have to know it all, right? And understand why it's working on your finances.
Yes, yeah, they've been great, because there were things we weren't doing right that we now are. So that's been a great part of the process, but it's a lot of work.
Right. And there's some costs involved, right?
Oh, yeah.
Unless you negotiate I get that often. They send me the message or the mission for their message, and then we talk about the asking for sometimes works, sometimes it doesn't. So, but let's go. We'll just kind of go this way. So,
Sure.
yeah. What's your?
Yeah, hi, I'm Molly. I'm at the Boys and Girls Club of Tahoe with Jude. My hat gets to be actually Director of Administration doing finance and HR. Jude still does a lot of our kind of budgeting and all that, and a lot of our grant writing and reporting. But on my side, I do some of the reporting as well. And I'm trying to figure out, we have a bookkeeper that we hired on a contract system, and I feel like my skills are like definitely like looking at the fine-tooth comb of the budget to see if like everything gets kind of fallen in place, where the balance, checks and balances, that side of it. We have some, I would say, pretty good efficient systems for as far as checking everything, overseeing things, oversight. We have, the Jude should be talking. She's looking at me like, you know what I say.
No, it's okay.
Yeah, and we had a huge capital campaign recently, which also was a good learning for us as well.
So you've got restricted funds,
Mhm.
restricted to capital campaigns.
I think that's the key thing, actually. So, you know, I used to do everything, and it was great because we were tiny. And then we did a capital campaign that was highly successful, and I did not know, because I'm not a CPA, that there are different rules about how to account for capital campaign money. Like, when someone gives you a pledge, why would you say you got all the money when actually you won't get all the money for 5 years? That one still blows my mind.
Right, not conditional pledge, right?
Yeah.
Or-
Yeah,
right.
but it seems really weird to recognize it all in one lump sum rather than when the checks actually arrive. And then we also got a really big grant from the state, which tripled our budget and also pretty much tripled our staffing. So, hence Molly, to help us really deal with that, because it was, you know, suddenly there was a lot more compliance required.
Yeah.
Though, you know, our audit went from being really simple to being really complex, and
Was
I
it a
think-
federal grant? Was it a required a single
no,
audit?
it was a state grant.
State grant. Excellent, all right.
Good morning. My name is Chelsea Thomas. I'm the executive director at Live Violence Free. So my role, I'm really that high level financial oversight. We also work with an outsourced accounting firm for the majority of our accounting duties, and then in-house have a director of administration here in South Molly, and we have our fiscal and admin specialist here. Yeah, to kind of be that point person, payroll. You can expand on some of that stuff.
Yeah,
Mhm.
I need some notes. So yes, we work with a CPA, definitely, there's some things that she doesn't help answer.
That's been
She's
that's
dry.
been
She's dry, I hope.
yes, it's been interesting kind of
Just
being
outside
provided
stuff.
information, and then it's kind of okay, now you guys kind of figure out the decision
Right,
in the
right.
next step.
Like the audit fell on us, I
That's-
think, a lot more than we
Mhm.
anticipated.
Mhm.
Our accounting system is like from the 90s, it's called MIP, it's very hard to get reports out of, so we're like building, I have a good Excel background, so I'm building some Excel tracking meanwhile before like we get a system, but we really hope to kind of get with the times,
Yes.
I think, for
Yes,
lack of a better
absolutely.
word. in
That's a
terms
ringing
of-
testimonial for MIP.
Yeah.
Sorry.
Yeah,
That's my personal opinion. I
Yes.
come from car dealership software, education software, healthcare software. So, and then I think, and I'm hearing this, I'll always hear this in a nonprofit room, I think, we have other job duties. Like I have our social software platform that I'm
Yeah.
trying to help with, and, you know, numerous other administration things. So it feels like accounts payable and payroll is like always on the background and a hurdle sometimes.
The payroll, you said?
Yeah.
Yeah, well, my basic advice to my clients is don't mess up cash flow and don't mess up payroll. You'll
Yes.
hear, mess up payroll, you'll hear it
Yeah.
within about 15 minutes.
Uh-huh.
I missed you in the back, I'm sorry. What's,
That's okay. I'm Harold Singer. I'm with the Marine Research and Education. So we are a very small nonprofit. We run about 4 months out of the year, and that's it. I am the only unpaid staff person, and the treasurer and program manager.
Okay,
So other than our program staff who are teachers, I do everything,
wow.
which includes grant writing, payroll, everything.
Okay.
I use Excel. That's it.
Check your formulas, but Excel is a perfectly fine software, but if it's small enough, I think it's absolutely fine. Having a closed set of books is nice though, although it might be questions on it. All right, so we'll go this way, so we'll start over here.
Hi, I'm Becca Matland. I work for TAMBA. I work as the operations manager, which is a newly established role in the organisation. So the role has only existed for a couple of months. I've only been with the organisation for a couple of months. This is Drew, who's our executive director. So I think what we're trying to establish is how my role can support our accounting policies, procedures, grant tracking, all of those good things. My background is in kind of establishing standard operations procedures, policies and procedures, compliance. So I think I don't have an accounting background, but I'm keen to learn how, in my role, I can help and support that kind of tracking and process system with our accounting as an organisation.
Gotcha. And you're the executive director of all that, right?
I've been called out all the time. It's good to be here. My apologies for missing the last couple. As Beckett alluded to just a couple of months ago, I was only man left standing with the organisation.
Oh, wow.
We've now ramped up to 8, be 9 tomorrow. So we've got a lot of growth happening. Yeah, it's exciting. It's also
And challenging.
gives me some things to do.
Yeah.
We've grown dramatically since I've joined the organisation. I think when I interviewed, we had a couple of 100,000 in the bank, and now we're north of $1 million. And a lot of things coming in the future. So there's lots of challenges with it, and as we've grown, it's building the systems to support that.
Nice.
So bringing in new
Yeah.
payroll systems, cleaning up what was a really good system that was built by those that were there before, but there weren't any paid employees, and it grew to one. So as we're growing, we've got to start looking at things again. So this is good. QuickBooks Online is our beast. I'm pretty comfortable with it.
QuickBooks for nonprofits, right?
Yeah,
Yeah.
yeah. And I've run plenty of projects and in the for-profit world, managing books, managing staff, things like that. There's a lot to learn with this one, and then I want to be prepared for the eventuality of an audit. Before the audit turns up, I would like to have a little bit of practice and not get it all delivered in one fell blow.
Right.
But yeah, just sort of growing, and then have some questions as we get through there with some systems and tracking procedures and
Right.
processes. But yeah,
Well, good. Well, feel free to ask questions, and hopefully we can answer them. So,
yeah, that's
all right.
fine.
Thank you.
Hi everyone, I'm Morgan Steele. I'm the executive director with Tahoe River Trail Association. We have one other staff member that works on some of the finance and admin stuff with me. We have a CPA that we hire for our 990 after we have an audit. And I think the big challenge for me is I feel like just kind of tracking where some of the changes happen with nonprofit, their tax code and law around that, things around, because I feel like we find them when we get to the audit, and it's like, oh, where are you at with this lease liability thing? I'm like, lease liability, what?
Where have you SASA?
Yeah.
Yeah.
Yeah, or, we need to change the whole grant process again, and kind of like you were saying, like, we're gonna earn these grants as soon as we get them, instead of how it's been the last 3 years, where you earn them as you spend them. And so trying to kind of keep up on all of those changes, and, it's interesting.
It's a challenge. Absolutely.
I think Morgan nailed it there, where like there's more we need to do in advance now of the
Yeah.
audit. So the one that blew my mind last year was when you do a raffle or a silent auction, anything that goes for less than its value is accounted one way, and anything that goes for more than its value is accounted another way. And I'm like, we didn't track that.
Right, that's a lot of tracking. Yeah.
And then
That's
you
how you
waste
do it.
half a day
Yeah.
going back through every single raffle and silent auction and figuring it all out.
What was the
Like,
value? Right.
that's a nightmare.
Yeah.
Well, I think, people at these regulatory places, whether it's FASB or wherever, IRS, they've got to justify their position somehow. Let's change that. Lease accounting, I remember studying that in 1985, right? And it was just fine. We all understood it. Now they decide, well, you know what? Yeah, I know you've got a operating lease for your building, but we're going to put that on the balance sheet,
Yeah.
even though you don't own it.
Yeah.
So the whole thing is silly. Anyway, I can go on. Put the coffee on hold. All right. Well, thank you. It's,
Hi,
just
I'm
right.
Karen Hauser, and I am part of a new nonprofit called Encompass Youth. So
Nice.
we're just entering our third year. When we applied for, it kind of relates to the finance. When we applied for the 501c3 designation, you have a choice of going the EZ form, and supposedly it was going to happen quicker and all of that, which it didn't. It was the height of COVID, and it has a ceiling that you can't make bring in more than $50,000 of revenue for your first 3 years. Never dreaming that would be kind of a
Blow
big
right past
challenge
that,
to
right?
have.
Yeah.
And so it's limited our ability to grow, which is kind of a good thing, but it's also challenging that there's these yummy opportunities that you kind of have to pass on and wait for another
Well, let's
year.
talk about it real quickly. So you're saying when you did your nonprofit application? it's
Yeah, the
1023
1028 or
or
1023 is
Right.
an easy application, which was real simple, or the full-blown one, and having had experience with a similar nonprofit that was all volunteers, I just thought, no problem, and dreamed to have, $20,000 each year.
Right.
And not that we're, floating in $50,000, but you just have to be really careful because what you read is the IRS is gonna go through and flag you if you now all of a sudden, instead of filing that 990 in, you're filing the 990, what is it, EZ?
Well, right, because when in the easy, it's 990, yeah.
So, long story short, we're an all volunteer and our board is fabulous. And then we also have a team of volunteer navigators, so it's no payroll or anything. And part of our board was a wonderful woman who runs her own nonprofit. And with the caveat that she would be the treasurer as long as it was with the interim. So we now have a young woman who I just had a chance to meet with 2 days ago. I like numbers, I'm not good at them, but I do like them. I love Excel and I'm comfortable in that platform, but not QuickBooks. And Drew, if you haven't taken the course here, the QBO course from Treva, treat yourself. It's like just way more information that you want. But and QuickBooks Online is just changed. It's so dynamic anyway. Like even within that.
And get
course.
used to that. If anyone's using any kind of desktop version of it, it's going away.
Right. They're
Yeah.
saying they're not going to support it. They're
Right.
not going to sell it. And your question about is it QuickBooks for nonprofit? There was a desktop version of QuickBooks for nonprofit. There's only two options when you go through the TechSoup, which is, and they're both wonderful, but you
TechSoup
get
gets
to
you a discount
select
on
the
the- right.
nonprofit as your business.
Yeah.
So
Yeah.
long story short, QuickBooks Online will just be a game changer. I think the challenges are just because it is all volunteers, but we want to be prepared for the day we do grow into payroll and things, is kind of learning lessons from everyone who has already gone down that path ahead of time. Jude
Right.
brought up an important piece that, I never realized either. Just the whole change, not only of how to track the donations and what you made on something bid more than market value, but also how to record and track the in-kind things that
We'll talk about
are
it.
just a big
Both professional
deal.
services and regular income. We'll talk about it. That's all in our material here. We'll get to that. Yeah, but I want to just unpack one thing from you. I hate to hear you say, well, I'd love to be able to grow. People are beating a path to our door, but I can't because of our application. There must be a way to change that. And
It's
then you can refile the 1023. There's got to be a way to
yeah,
we
but
cannot
it
have
just
you in
isn't
revenue.
worth the risk right now. That we're okay with what that ceiling is. We only have one
Now,
more year to grow.
If you're saying risk as it relates to running a larger nonprofit, then
No,
I'm
it's a risk that the IRS will red tag you
How many-
and potentially come after an audit and,
How many
and
have been audited
maybe
by
forfeit
IRS?
your.
How many have had an IRS on it?
I did just as a personal.
No, it's your nonprofit. How many of you had an audit?
Or, like a
Like a
standing
single
audit
audit?
every year. that we do.
No. The IRS will send you a letter
Uh-huh.
and say, we've selected your 990 for examination. Here's a list of records we need. How many of you have ever had that happen? It doesn't happen very often.
We've been subsidiary to school district audits where we've had to come in because we're a subcontractor.
Now, there's the financial statement audit component, right? That's what your CPA will do for you, provide a report. There's a single audit where you've got federal grants and the whole reporting criteria for how you report on federal grants. What I'm referring to, just the IRS going, there's an agent who wants to see your books and consider whether or not you're following rules. It doesn't happen that often. It's rare. I asked the question, I hear crickets, so I wouldn't worry about the
And
risk
I'm
the
not,
IRS.
it was enough to just, send up a red flag that they would look at that and go, well, wait a minute, you're not only supposed to file a 990 and not a easy, so.
Right, well, okay, all right. My thought is you can find there's a way around it, so. And what's your,
So I'm Shannon Lane, I'm the executive director for Top Youth and Family Services.
When did that happen?
Should I first?
Oh, really?
So it's new. So we just changed, we had a CFO for a long time, and then the organization went through quite a few changes, and the CFO resigned in the beginning of the year, and then we outsourced to an accounting firm. During that time, we were using an old CenterPoint financial database software that we converted to QuickBooks, so it's taken, the last few months for our accountant to get all of that all that data for 20 years out of the Centerpoint and put it into QuickBooks. So that's been interesting. And then we have a fiscal manager who was the CFO's assistant, who does all of our AP and our AR and our payroll and everything like that in-house, all of our invoicing. And then our budgets are created with the executive director and the board treasurer. And then the grant tracking is done with myself.
Okay, good. Okay, well, we'll talk about budgeting as well. So. All right, well, thank you. It's good to get your backgrounds here. So, a couple other thoughts on challenges for accountants and nonprofits. Now, since in 2020, 75% of the CPA workforce has met the U.S. retirement age. I'm 60.
Wow.
I've got half a dozen accountants in my office between like 28 and 34, and I can't get any of them to get their CPA licenses. Now, back in the day, I could say, well, it's up or out. I'm going to fire you and let you go, but I need them. Good accountants. They're good people. It's hard to find accountants. There's a shortage, and it's going to continue.
Why don't they want to do it?
What's that? But they don't want to sacrifice nights and weekends. And so the comments are, well, if you can pay me to take time off to study, then I'll do it. Pretty sure back in the day, you did nights and weekends and you figured it out. You know, I'll reimburse you for your review materials. I'll give you time off to take the exam. I'll give you a few days off before the exam. But I'm not going to pay you for 2 months to sit home and study. I'm not doing it.
So what they do doesn't help them pass the exam? Like what they do with you doesn't
You would
help them?
think. It's a different generation. I know it's not going to change. It's yeah. They're now. Like I said, I think it's just a generational thing. They have a different approach to work, different approach to life and lifestyle. It's just, and I'm interested to see how, if I live long enough, to see how this next generation runs things.
And
But someday I'm going to be in my position. I'm going to see how they do that.
And is the process still the same as it was 30 years ago?
Of the exam, it's got to be easier. They have it every 2 months. And you can use calculators. Back in my day, quill, lemon paper, no lights. Cars going by all the time. No, way harder than I did it. The walk there too. Winds in your face both ways. I'm snowing and whatever. Yeah, different world now. And the interpersonal skills issue, we can go on about that. Right? They're not good at this sort of sit down. They'd have apoplexy doing what I'm doing, but I tell you, if the wireless printer's not working, it'll just be on like a pack of jackets. Oh, so we need to update the social media. I'll do that. They're fighting to do that. And they're doing the selfie thing. But there are some skills challenges in the next generation, and I'm seeing it. And I see it in my kids. Who are 19 and 23.
As someone who feels I'm paying more and more for financial support,
Get used to it.
well, I guess my question
That's a good
was,
trend.
there's no,
I'm feeling better already.
there's no financial incentives
For what?
to move up to sort of CPA.
There is, and that's the thing. There's I sort of carrot on the stick, and they said, that's fine, I'll take the stick, thank you. And it's just like, all right, whack. And yeah, I don't know what I'm gonna do. Other than there's I just have to learn to live with the environment I'm in. I'm sorry, it's just the way it is. I mean, I see the national firms recruiting people who don't even have accounting degrees. We'll train you, we'll pay you, and it's like maybe not. So, like that last bullet point, there are 33% drop in new CPA candidates between 2016 and 2021. Now, impact on nonprofits. So the second bullet point is probably the important one: lack of CPA firms focused on audits of nonprofits. Now, you guys seem to have made connections with firms that are willing to do the outsourced accounting component. You're able to find auditors, but for how long? I don't know. I mean, they'll always be out there. If the basic economics of the fees for doing it, of jumping in with both feet and being just a nonprofit accountant. You mentioned the fees are going up. There's a reason why. There's a shortage, and there's a demand, and there's a complexity. You mentioned the right of use asset for lease liabilities. That's just a complication of the simple leases now changed, and how they account for that, and how they audit them. It's regulatory also. That's why your fees are going up.
I think, I know of one bookkeeper in town that's probably going to go away soon. And we already share a bookkeeper, so we have a shortage not just at CPA level, but also at bookkeeper level.
Any of the financial services level, absolutely, did bookkeeping level, right. So well then look at that last bullet point on the last section there. Increased automation, software, AI, and outsourcing, right? At what point is AI going to jump in and take over? I'm hoping it's soon. I'm late. If I get home at noon, bring in the robots.
Right.
I'm all for it. Virtual Dan may have more personality. If I get ChatGPT to do my work, that's fine. But more seriously, is there an opportunity for something like that to automate your research and writing of grant proposals? Is that an opportunity? I'm hearing about students using ChatGPT to write papers, and they're shooting them down right now. They're catching that they're doing that. It's going to get better. Right? Is that an opportunity? Is that an outsourced function that may do better than you?
I have the CEO of the Boys and Girls Club of Napa, I won't share it with you all, has already written up a whole how we can use chat for our work, which is depressing. But they will never supervise children, so that's good.
For now.
We'll build for it.
The kids. No, I think there's always going to be a need for the human touch to things. I remember when I started in '86, they had the Tax Reform Act of '86. The partner firm I was at said, Dan, you probably shouldn't focus on tax. They flatten the tax rates. Software now, you can use this thing called a fax. Right? It's a game changer, and really you might want to find something else to do. Right? Well, 37 years later, I'm still getting home at midnight during tax season. Right? I can't find enough accountants. There's just not enough out there, and there's a shortage. We have been outsourced, right-sized, automated to death, and we still can't. I still can't hire enough people. So I think there's always be the people who know, and you'll learn to use that technology to your advantage. Embrace it. I think. That's my idea. So then the other underlying bullet point I have for documenting SOPs and your accounting flow. So whoever's in charge of that right now, pin them down. Right? If you lose that person, there's a lot of IP that goes with them. And I know they'll say, yeah, I'll help them transition, but do they? And do they put their best before them? Because what happens is they're going on to something else and they're just as busy, if not busier. Document your SOPs, get those in paper, get those down in writing, and review them, see if it makes sense. That is critical. And then succession planning. If you think someone's going to leave soon, how do you then research to make that replacement? You see that at the executive level. You consider that for the accounting level if you've got a large enough organization to be concerned. All right. So let's talk about some general accounting issues about, where you guys are in nonprofits, you're in fund accounting, right? A whole different focus of how the commercial accounting is done. That bottom section I have there, focus on accountability, it's transparency. You've got people looking at your stuff, if you will. You've got volunteers involved. You have board oversight. You've got way more board oversight involved in nonprofits than we ever have to worry about in the private industry. I've got clients who have, board advisors and boards of directors, and they're involved, but not nearly to the level I see in nonprofits. A lot of times they're too involved. Or maybe not involved enough, right? So maybe you have some on the board that are more involved than others, probably a variety, right? But in terms of the accounting function, it's based on accountability, not necessarily profitability, right? So we have a gap for nonprofits that has evolved over the years. There's a number of pronouncements that have come out over the last several years directed just for nonprofits. We'll talk about a few of those. You have the concept of restricted, temporarily restricted, and unrestricted funds. It's still there, right? You still have, there's a reporting in terms of net assets with donor and without donor restrictions on the statement of position. We'll talk about that in a second. But how you evaluate reporting is still the same. You have donor restrictions on contributions. What's a good example of a restricted contribution? What's that? A grant, almost all grants, right? You gotta spend it on something specific and give them some type of reporting. And there's a timing issue, right? You gotta get it spent. Well, maybe it's contingent upon you doing something, you get the grant. All right, so how many of you just use a cash basis of accounting? I know some of you do, because some of you said you just do things on Excel. Right. Is that the best method, or is accrual the best method? What's the best method? Is there one? I think it's what's most appropriate for your organization. Now, if you can get an audit, you're going to have to be on the accrual basis, so it'll push you into it. Right. But really, you're focused on the cash flow in and out. When you're doing your budgets, do you budget on the accrual basis or cash basis? Accrual. But then you convert it to cash. You convert the impact to cash from your budget, and you budget for your lowest levels of cash throughout the year. that's something we would do more on the commercial side. But do you ever convert your budgets to cash? So what's the impact on cash flow? I think you should, or at least consider it. But yeah, you would normally budget on the accrual basis if that's your main method of accounting. But the impact on cash, I mean, is important.
I feel so much of our work as well is, you know, when I'm doing the revenue, you know, you get your grant when you get your grant. We had a situation last year where one of our state grants that was meant to be paid in January got paid in May. You know, and
There's
I
the impact on cash, right?
I have zero control over that. And I think, you know, we can, I try and use actuals from the previous year to kind of plan out, you know, when we might receive something. But aside from actually the membership fees from the kids who attend the club, I have very little control over the rest of the revenue.
Sometimes.
Yeah, and so how many of you are dependent on public funds and grant or public donations? And what component of that is your revenue? How do you know what's coming in? We're going to talk about donations and the patterns and some things like that in just a little while. So just another quick question. You have permanent and temporary restrictions. What's a permanent restricted grant or source of income? Not income, deposits. What's that? Endowment, right? A scholarship fund. What would be an example when it's temporary? Grants, right? Yep. Okay. All right. I put this in here because I came across this list of principles, and I think that people have a lot of time in their hands. Right? The list of principles have grown dramatically, and they've added some that I was not aware of. Right? And I'll point out the principle of prudence. My parents would describe that when I was a teenager. You know, I've never heard of that. There's no speculation in the reporting of financial data. All right, well, there's the use of estimates. Of course, we don't speculate. We need to put that out as a principle. The principle of sincerity. Explain that one to me. Oh, here's your audit. Here's your financial results. Oh, no, I'm just kidding. No, really, they are. I pledge to be sincere. I will not kid around when I give you your financial results. I don't take myself seriously, but I'll take this seriously. Here you go. Principle of regularity. I never heard it put that way. Right? I think this might have been something out of maybe this was an April 1st, April Fool's joke. Now, once you do it, you need to consider about principle of materiality, right? What is materiality for your organization? What do you think? What's individually significant in terms of a transaction? Does your auditor consider materiality? They do, absolutely. Do they tell you what that number is? Do you know what your materiality is? Is it 1% of revenue? Is it a percentage of assets? Find out next time. Your audit. What is your selection for materiality, and how did you select that? That's my question. That's what it's fun to get. All right. Take this slide with a grain of salt. I can see we had the same printouts as yesterday, so you may not be able to actually read what's there with your printouts. But we do have access to a PDF copy, so you will have all this material, I promise. All right. So some specific pronouncements for nonprofits. So that's the thing interesting about the nonprofit world, as you mentioned, the right of use asset. That is a FASB pronouncement that came out that's been delayed, and they finally implemented it, where you got to report. Pretty much all of your leases have to go on the balance sheet, whether it's a lease of equipment that's really kind of like a purchase, like a financing lease, or an operating lease where you're leasing facilities, something like this. Right? You have multiple places you're leasing. It ends up on the balance sheet as a right of use asset and a lease liability. But that came as a result of an ASU. FASB put out a pronouncement and said, yeah, we're bored. We want to change this. We haven't put out much lately. We decided to do this. Yeah, I know it was working well. It wasn't broken. We had to fix it anyway. But there's a series, but they have a series of pronouncements that just apply to nonprofits. So you have to keep your eye. So the auditors have to keep their eye on both, right? There's ones that are specific and ones that are general that apply to any business that has debits and credits. All right. So then the first one, at ASU 2016-14, is probably your fourth one. That finally got implemented, I think, in 18. That was a statement of functional expenditures.
Oh my gosh.
That came into being. No, I said this exactly. It's mostly all of these pronouncements, but that was a main one that came out that changed how your financial reports looked.
I don't know, did everyone else have to do this where you had, what space, or like square footage is administration, what square footage is programming, what square footage is fundraising, like I did that.
You gotta film yourself doing it, yeah.
And then we all wear, like, I do all of that, right? So how do I account for me in my office?
That's it. We're gonna talk about direct and indirect accounting, or cost allocations in accounting. That's a great question. We'll get to that. We'll have a chance to really kind of dive in and look at it. So, but you're right. That was part of that pronouncement. Now that statement of functional expenses also ties back to your 990. In fact, if you're an auditor, you're supposed to use the same one used for the other.
And
So.
then, I'll be honest, I hear that on GuideStar and places like that, it looks better if you spend all your money on programming, so shove it that way.
All right, I gotta use my whiteboard now. All right. What's a good amount of expense for administration for a nonprofit? What percentage should you be spending as
Less than
administration?
20, yes.
Less than 20? Is 15 better than 20?
Yes,
How about 10? Is that better than 15?
yes.
Is 5 better than 10?
Maybe not.
1 better than 5? We're gonna get to a point where you say no. Is 1 better than 5?
But I would jump in on the other end if you Google university. And I mean, it to me, just because I've watched that through the years, just for different reasons. And I think that I see in some of the research I've done that they're becoming more willing to accept the fact that to run an organization, you need that higher percent, and it's 5%.
Well, then what's your number? Is it 5%?
We're
Zero.
No, I mean, what do you think is the ideal?
I'm still verdicted out.
Well, what do you think?
I just think to
30%?
operate effectively, I
Okay.
think you need 20%.
So 28 is not as, oh, I'm sorry, go ahead.
I think it needs 20 and more. I mean, you look at.
A lot of our grants say you can't spend more than 15% of the
Yeah.
grant on administration.
So 15 is a good number for your grant. Is it a good grant?
You know you're talking.
Yeah, well,
We can also.
So they
use those
dictate terms of
costs.
how you run your nonprofit. Bill, Bill, question for you. You said 30. Is 28 better than 30? And is 32 better than 30? And the answer is no to you. 32 is better than 30?
Better than 30.
Okay, if you spent 34, is it better than 32?
Yeah.
You spent 100. You spent 100% on
The
administration.
reasoning behind that is, in order to achieve excellence, you need to compensate for excellence. You need to pay for
Can
excellence.
I
That's
get
the
that right?
we all agree with that. It's the
If you're
funders
paying
that
a
don't.
mediocre-
It's a matter of educating people.
Yeah.
It really
It
is.
Donors are starting to get this, that if you're
Yeah.
paying at a mediocre rate, you're going to have mediocre returns.
Yeah, absolutely. Yeah, I would say, anybody remember the Laffer curve? More of a tax issue. If you cut taxes, it raises revenue, right? So it's supposed to look kind of like this, right? And I think that's kind of the same thing for administration, right? So where is that sweet spot? If you start spending less, your efficiency goes down. I promise you, if you're spending 0,
Yeah.
you're down here, right?
And now you've got burnout too. You've got.
Or you're down here. You got burnout, right? You're running inefficiently. You're paying for mediocre services. You're not doing the pitching and catching, hitting singles and doubles, whatever analogy you want to use. You're running a poorly administered nonprofit, and it's going to affect the community you're trying to serve, or those folks you're trying to serve. So now finding this right percentage, Bill said 30. I could probably agree with that. I've read where the average is around 40. Right? Now I've seen some that are way up here, right? And those are the ones you're going, well, what are they really doing with the money they're getting? But consider whether or not you're really making effective changes in your nonprofit. If this is where if you're always fighting to get this number down, are you doing a disservice to who you're serving? Right? The matter of maybe educating people who are issuing grants, educating donors, people who are reading your financials, because they are reading them. They're certainly reading them.
One
I've
thing,
got a copy of this, by the
it's
way.
just kind of a different piece of it that I worked with the tribe for several years, the Washoe tribe, and they do the negotiated indirect thing, and I mean, the departments would kind of hassle with each other. It benefited some departments and not other departments, but
Right.
at least it was some amount of reasoning behind it, so.
Yeah, we'll talk about indirect allocations or indirect cost allocations methods for it. I want to hear from you guys what you're doing. But when I make that point, and Bill, thank you for amplifying it, that you're getting what you pay for. And it's really my opinion, a matter of educating. And we know that, yeah, you need a well-run organization. We want to do the best we can. All right.
Ski industry.
I'm sorry?
We should talk ski industry if you're gonna do that one.
That's
a can of worms.
Skiing, oh, okay. You know, it's funny, it's the ski industry. I'm like, I'm a CPA, and I've skied like twice in my life. I'm going to ski now, I think, right? All right. There's some gap departures that I typically find in nonprofits, how they treat fixed assets, in terms of depreciating. For me, to fixed assets are more about the value, looking at it from a CapEx component, right? What's your spend, not your recovery of cost. Depreciation is simply the recovery of cost over time of an asset that provides a benefit over time. That's all depreciation is.
And that was another thing we got into on this past audit was, where do we want to set our fixed asset cost? Our capital expense cost, I used to think it was, and any single item that costs over 500. But it seems now that, it's more anything that's over 1,000 or 2,000. Basically, our auditor said we could pick the amount. And I'm like,
Yes, it's too many choices there, right? So what do you guys choose for your expensing fixed assets? What do you know? You mentioned 1,000 now.
5,000.
What's that? 1,000? The IRS is
5,000.
5,000. Okay. The IRS is 2,500, right? But they don't seem to care, and they're not going to care about a nonprofit. They're not going to beat you up over that. That's stuff they wouldn't even look at. So if you want to choose 5,000, I think whatever minimizes the amount of effort on your part. There are more important things to worry about. And I think that fixed assets are more about the capital expenditure component. What is the cash flow you're spending on? And how are you reserving for it? How are you putting a few bucks away to pay for it? You have to write a check, right? How's that cash flow?
on fixed assets as well, like, is it an individual item or a group of items? We ran into this with our new building because we bought a lot of furniture. So an individual chair is only $50, but the whole room
What about
of
the chair?
chairs. Oh my God, this is a nightmare.
What do you think it is?
It would
Well-
be the group based on the expenditure, wouldn't it, or not?
That's one answer. Anybody else? How many vote that it's actually an individual item?
We have to
Yeah, I do. Yeah, pretty much they let you look at each item separately. So they do. Now, at least in terms of tax law, they certainly do. Now, you've got to do things how you want to manage your nonprofit. But my bigger point was, how are you managing the cash flow component, the CapEx component? And then building it in your budget and then reserving for it.
And depreciation, I still don't understand how that's calculated.
Okay. Let's put it right out there. So the concept of depreciation is a recovery of cost over time, right? It's an asset that provides a benefit beyond the current year. That's why you depreciate something, right? Use my board now. I think I need a chance to use it. So you got this. I won't spend a ton of time on depreciation, but you're recording that cost over a number of periods. So it looks like this, right? Again, same little. I was an econ minor. She I'm like, yes, I got these. Just applying the manner in a second. So you're really recording cost over time, right? So you might have these are years, right? And you're going to record the same cost over time. That's if you're using a straight line method. So all you're saying is I spent $10,000 on a fixed asset, and I think it's going to last for the next 5 years. So you're going to record what? $2,000 per year as the depreciation expense on your books. But when did you spend the money?
In the first year.
In year one, right? When does it really impact you? Year one, right? You can account, you can budget for depreciation. It makes no sense, and you can consider it. But from my perspective, it's the timing of capital expenditure. So now you can have depreciation that looks like this. What's this called? It's called declining balance, right? So you're taking more in the first year and less in the last year. Why would you do that?
Because it's worth value.
What's that?
Value.
Related to the value of the asset?
Pretty much, yeah. Because what's repair cost you? Right. Well, so now I had a saw. I know you have a song. They don't make them anymore. There's a why. I think Saab was Swedish for check engine light. You know why you don't see too many in around their own repair shops? I got really strong legs from doing this. You know? I just spent $4,000 just to sell it for $5,000. I spent like $40 on it. It was like 6 years later. So now that's why you have something like declining balance depreciation, because your value is doing this, right? And then I'd argue it's doing this. And what's repair cost doing? It's like a hockey stick, right? It's going right now. And I need more. If I had a paper thing, I'd pull it up. I'd go up. That was my vehicle. So then what you're really trying to do with declining balance is you're saying value's going this way, repair cost goes this way, total cost looks like that. I think there's some merit to that. Anyway, you're in a nonprofit environment. I don't think I get too hung up on depreciation. I just kind of enjoy doing these kind of but that's the concept of depreciation. The other area is investments too. You're supposed to adjust your investment values at the end of whatever reporting period you have, right? I assume you guys are doing that too. And what happens to the gain or what happens to the net unrealized gain or loss on that? Does that impact the profitability of the nonprofit? Is that part of your statement of activities? If your endowed monies go down 20%, do you record that?
Don't have it.
Yes.
You do?
Yes.
Yeah.
Right. Well, because, yes.
Yes.
What happened in 2022? Did the markets go down on the
Yes.
books? Yes. Is it possible your loss in investment could actually create a negative revenue? Yes. So anyway, so that's something I sometimes see out of compliance.
With investment, you're looking at specifically for endowment level investments or short-term investments?
Whether you have expendable funds or endowed funds, whatever it is.
Whatever it is.
Yeah, you got something invested that's not in a cash or cash equivalent. All right. All right, so now we get into some accounting stuff here. So here's all your financial statements. Statement of financial position, statement of financial activities, statement of functional expenses, and statement of cash flows. Which one's the most important? What do you like the best? Which one do you go, you know, I got the financial report, I'm going to go this one first. If you'd chosen any one of those, but you chose that one, and there's a reason why.
Well, you said cash flows to be.
Well, that's what I said, but I'm asking you.
So you're sharing it.
And I don't necessarily think cash flows is the most important. I think cash flow budgeting is important, but what do you think is most important?
Position.
Yeah, I think you want the overall,
They're
in
saying
the
all
future,
equal.
you're gonna have, you know, ebbs and flows and
Such as
just
what?
over time.
Right, but when you get to the financials, which one do you grab first?
Yeah, I'll just go to financial position.
No, which one do you like?
All of the above.
That's probably the best answer. Yeah, they're all important, right?
Yeah.
What's that?
No, they are.
Yeah, I think they're all important. Yeah, it's a comfortable question. So the statement of financial position is your assets and liabilities. This is your balance sheet, right? That's what that would look like. So I've given you a sample statement of financial position for a nonprofit. Now, that 2016 ASU puts out this component of it as part of it, where you're splitting out net assets between which that have loan restrictions and those that don't. I'll show you how that looks on the income statement. Assets are listed in order of liquidity. Cash and cash equivalents are first. We have got receivables, prepaid expenses, investments are listed at value. Then we have property and equipment net. What's net mean? Net of depreciation. Why are we putting that? We'll have a footnote if we're doing the audit that shows the original cost and then the accumulated depreciation to date. Again, for nonprofits, I'm more concerned about when you have to pay for it and how much you pay for it that year, and then budgeting, what are you going to have to pay for it in the future?
Go back to depreciation. I guess when I said I don't know how to calculate it, I understand what depreciation is. I guess my question is like, does it matter if I say 5 years and it lasts 10 years, or vice versa? I guess that's what confuses me. How many years I should project that out over?
Right, you're supposed to get in a time machine. Go to the future. It's still there. Look around. It's not there. You got to set the machine back a couple years. It's the use of laptops. I think it's almost disposables, right? It's an estimate, right? best estimate? How long does a computer last?
Well, if it's an Apple, they're gonna tell you it lasts 1 year and you need a new one.
How many are using apples for their nonprofits?
Well,
Really?
it's mine.
More than
Well, specific stuff. We need all the fancy graphic stuff.
Right, that's true. You make your best estimate, right? And if you guessed 5 years and it really lasted 3, then the next time you replace it, you use 3. And the last 6, then you go, well, I guess I was overly pessimistic there. I'll use that the same amount next time. So do the best you can. That's all I can say. It's an estimate. Now, if it's clearly an error for the classification, where if it was a building and you put down equipment, then that's an error and you can fix it. Right? That's not an appropriate recovery time. But if it's equipment and you pick 5 instead of 7, you go with it. And then you live with it. Those are choices you make in life, and you just go forward. All right. Any questions about the statement of financial position? Again, it gives you, from my perspective, information on liquidity. What's liquidity?
You have money to spend.
You have money to spend. Exactly. I talked a lot about
Without-
so you have cash in the bank, and if so, how much? Right? Yep, liquidity. And then what's solvency? If this number,
Money you don't owe.
well, pretty much, yeah. If this number's higher than that number, it hurts me to see those zeros. If I have a number that's higher, my liabilities are higher than my assets, do I have a solvency problem? Potentially. Okay. That's just
Or
basic.
sustainability.
You have, right, sorry, you have a going
Sustain-
concern issue,
Yeah.
right? That's what your auditor may discuss with you. And we don't think you can be around next year putting that out. So you guys, for those of you who get audits, is it all unqualified opinions?
Sorry?
Unqualified opinions? Has ever discussed that with you? The qualified opinion usually means they think there's a problem. Right? A unqualified opinion, go read your last audit. Just read the report, see what it says.
We had findings.
Findings? Okay, we'll talk about that. All right, we'll talk about that.
Mainly with pledges.
All right, so what's the best part of getting the audit report from the auditor? Besides the opportunity to meet with the accountant. That's why I stopped doing audits. You know why I didn't do audits anymore? Because no one likes you. You're bothering people. I don't have time for you. That's how. But the most complicated part was the management letter. That's the letter of the dirt. That's where they're going to tattle on the financial folks in the organization. And that's always a fun meeting, meeting with the finance director or whoever the head of accounting. Here's my list of grievances and problems that you're doing. Right? And then to get the massive pushback. Oh, well, we didn't really do that. And all the, look, I told you I needed pencils down, give me your invoices, you can't change it, all right? No, you don't have anything sitting behind your desk and give me a change my mind. So it's the dirt, it's the information on the, but it's probably the most important, right? They're findings, whether deficiencies, forget the levels, just let that one. I have a couple of clients that get audited, and I always ask them, and I don't say that. But that's probably the most important in some ways, is what's going on within the organization. They're now raising to the level of trying to now tell you about it. Because if I get an invoice where there's a lack of approval, this is back in the day, we call it an isolated incident and we move on. If it's a pattern, it goes on the letter. We'll talk a little bit about audits when we get to the section on fraud. All right. Bill.
Quick question on the financial statement. There's a couple organizations that are in the room that are going to have accounts receivable. So they're waiting for payment on a contractual. And that's going to go into assets. It's going to inflate assets and make the balance sheet look better than the actual cash flow that they currently have.
Yeah.
So how do you address that from a board perspective when you're providing the financials to the board that needs to be called out?
Right. And so if it's going to be collected in the next 12 months, right, then it's definitely a current asset. It's a receivable. You're going to collect the money at some point, but it's what has it not hit yet? Cash. So if you give me a financial that's got 800,000 in receivables and $1,000 in cash, then we know there's going to be a potential problem, because maybe they can't make payroll. Or they're going to have to, in a commercial business, you would borrow, you get credit lines, you find opportunities to smooth out cash flow. You guys don't have those opportunities, right? That's why I was asking how you do when you're budgeting. You mentioned if you're doing it on the accrual basis, that's fine. As long as you've got sufficient cash to meet your, I usually try to map out what my lowest level of cash is going to be going forward. And if it's a number I'm comfortable with, then I'm not concerned about where my receivables are going. If there's a chance to accelerate the collection of it, find somebody in the organization who's on it, contact me, right? Get that money in the door.
And we had the opposite happen. So this grant that seems to dot around, and it's a state grant, our auditor said, stop putting it as a receivable. Actually now consider it a cash payment, because you have no idea when it's coming, or how it's coming, or if it's even coming in the right fiscal year.
So
And
that's right. So there's issues regarding whether it's measurable, right, and whether it's contractual. And if you can't even estimate the number or know the timing of it, then you have to wait. It's not revenue yet, and therefore it's not going to hit income, and it's not going to hit your balance sheet as a receivable. That's right. And those are judgment calls, right? That's where the experiences of the financial folks come into play.
So just maybe it fits in somewhere else, but just the concept of a contingency fund or a savings piece that could, where do you see that in the relationship?
Doing reserves for future expenses.
Yeah,
or cash
just
flow
some
or
of
CapEx.
those, maintenance capital kind of thing, that you just have that, little pieces that can sit somewhere for that contingency, even more than a reserve that you've got just unexpected.
Right. Well, that's part of your budgeting process, right? I mean,
Yeah.
I've already mentioned this about how do you budget in the CapEx component of how you're spending money. You have to map this out. You got to consider when these replacement costs are going to hit, and how are you going to fund it and pay for it. It's all part of the process of running a nonprofit. That's why you have talented folks like you involved.
On a small scale, like Jude was saying, that how do you budget when the only thing that is kind of a known history is those fees, how many kids and things like that. A service organization that I'm a part of, years ago, our organization had the luxury of our fundraising event one year it gets spent, and we have a real budget to work with for that next year. We've been fortunate that way in those years that fundraising event doesn't flush out, and there's not, that you have money to work with that you have. It's not all the unknowns. Where I wonder what our fundraiser will make the next year, but it took years for that to.
You get an experience level of cash flow, yeah. These are all challenges. It's hard running a nonprofit, especially if you're not well funded, right? Sustainability. How do you find additional funding sources? It's probably a discussion for a different person than me to talk about. So, okay, this is your statement of financial position. My bottom bullet point. Accountants take a balance sheet approach to your financials. When they're auditing you, they're auditing your balance sheet, pretty much. If I know the balance sheet is accurate, 100%, what does that tell me about the statement of activities? It has to be, by definition, right? If my balance sheet is accurate, 100%, I know the statement of activities has to be accurate also. And there may be misclassifications within expenses, right? You can't, we can tell, but we can't check every expense and every dollar. But if I know the balance sheet's accurate, I know the profit's right. It has to be. Because if the profit's not right, then what balance sheet's getting adjusted? What balance sheet account is getting adjusted? Okay, that's the difference. So that's the concept of a balance sheet approach. We will review each asset account. So, I'll talk about that in internal controls. All right, this is your statement of activities. Now, I know you guys are really sharp. And this statement was for 22 and 21. I just have 22 here. But don't beat me up, brother. I just didn't want to have this big wide schedule, okay? All right, so your statement of activities splits out your support, revenues and other income and expenses by whether or not there are donor restrictions or just unrestricted. Okay? This was part of the announcement that came out also. So how do we tie back net assets from assets that have donor restrictions and those that don't? So back on the statement of financial position, you can see our net assets are split. Right? Then how we got to that number, we're reconciling what I would consider net income. They call it change in net assets. At our beginning number from last year, that's our ending balance for this year. So splitting it out between donor restrictions and non-donor restrictions is how this report gets laid out. So look at your audit, I'm sure it reads this way. Okay? That's just fairly condensed. I'm showing program expenses, administrative, and fundraising as all lump sums. Okay? You can see more detail here. Okay? This is your statement of functional expenses by function and natural classification. So the functions are the columns, the natural categories are the rows. Is there any set criteria for what a natural expense is, how a natural expense is classified? You put something into office expense or supplies. What's an office supply versus an office expense? I get that question from my office manager, also known as Mrs. Stazak. I said it doesn't matter. Pick one.
As long as you're consistent.
What's that?
As long as you're
That's
consistent.
right. As long as you're consistent. We like consistency. I think buried in that list of principles was one of consistency. I like it. Now, if you're doing something clearly wrong, stop it. Don't compound your don't. It's one thing to look stupid, but repeating the stupidity is bad. If it's clearly a misclassification, fix it. Don't say, well, no, gotta have comparability. Be consistent on it. They'll talk about how we're allocating costs for both direct and indirect, but this is a basic report. All right. Now, I think our audit looks a little different. One of our functional expenses, I think, is public relations, communication. But that's just based on how our cost structure is set up for foundation. If I pull the audit, that's how it would look. But this is typical, right? I've got activities A and B as our program services, total program costs, management in general, and then fundraising. The problem is, how do you allocate, right? And we'll talk about that. I got a whole section on it.
And I think one thing for nonprofits it's challenging is you have your own company way that you set it up, but so many grants have their own budget template that you have to make those pieces fit into, which can kind of be a little bit tricky when you're tracking it consistently.
And that's a great point. That's a great point. And it segues into something else we should talk about. Hold that thought for just a minute. Let me work through a couple of these common mistakes, and then I want to give you an example of what you're just describing. Okay? All right. So financial reporting challenges for nonprofits. Common mistakes. Some of you may be making some of these. Not properly accounting for restricted gifts. Read the restrictions. See if you're doing it correctly. Are there donor restrictions based on time or whatever it is? Whatever restrictions are. Read it carefully. Yes.
So
Are they conditional or unconditional?
we had a good discussion about this with our auditor because, someone will basically, and this happened like the other week, I'm giving you a donation, this is through your annual giving campaign, however, I would really like you to spend that money on the art room.
Oh.
And I'm like, okay. So you've just given to our annual giving, which is unrestricted, but now you're restricting the gift. And then
They put that in writing, or they just tell you that?
They just told us that.
Oh, then.
And then how? So then my auditor was like, well, if you accept something like that, then you need to absolutely, let's say they gave 2,000. You now need to show 2,000 of expenditure on paint. And I'm like, oh God. So that's the kind of thing we're running into.
But what was the
I would have said, look, I think they said I'd like to be 6 feet. I'd like to be 6'2". All right, so that's kind of this. It was a suggestion. It was in passing. I think I answered a question from an hour ago. I don't know. I'm surprised you told the auditor that. So, if you told them that after.
Well, I've got a flip side question to that. When you apply for a grant that's specific, but when the grant comes, it's like in the payments and the paperwork, it clearly says unrestricted.
And you signed it, right?
And you're like, whoopee.
Yeah.
Well, then, yeah, and we kick up our heels, we,
There's the moral versus the literal there.
yeah. Well, luckily there's no moral audits.
Okay.
And just cold hard facts. Numbers in black and white, so, yeah, then you make it valid.
But we
I
have to
just
say,
think-
when we did the end of our capsule campaign, when we were asking people for gifts for furniture, we kind of had a, buy us a chair, you know, very reasonable cost. And we got dinged on that one because they were like, if someone is specifically donating for a specific item, you must show that you spent their exact donation on that exact item. And I'm like, oh, sugar. Because what we did is we just put it in a massive pile of money that we then purchased all the furniture with.
Right,
and
and you
so
tell them
that-
we've got 46 chairs and 12 desks, why remind me?
And so that was, I will say most of all of our findings last year were around the capital campaign, and that was definitely like something I was not knowledgeable about.
Right, well, I'm not surprised, so.
It gets difficult too for like different campaigns because we find donors really, they love that specificity. Like, my funding is doing this, and then you're like, great, but I started that campaign 3 months ago, and now we need to tweak it to this. So having to write those very specific, like, year-end campaigns in a way that doesn't restrict it, but still is enticing for a donor is,
I think we've decided in the future, it's gonna be general, and it'll be
Yeah.
like, you're
Maybe that's the best
donating to
solution.
purchase any one of these things.
Examples are.
Such as, yeah.
A quick example for us as a foundation is when we were engaged in the Caldwell fire, and there were people that wanted to restrict their funding, and we explained to them that that was just not going to be possible. That all the gifts that were coming in for the Caldwell fire had to be unrestricted. So you can.
What impact on the gifts do you think that had?
Pardon?
What impact on the gifting do you think that has?
None.
Yeah, none, well, there you go. They're gonna
So,
give anyway.
Yeah, they gave anyway.
Right. Yeah, there you go, lesson. All right, other ones are failing to report pledges, unrecorded legacy gifts. Anybody have, which ones didn't you do?
Well, it was mainly the pledges,
Yeah.
and again, it was this whole, you know, so someone's pledged to give you 50,000, so you must record an income of 50,000 even if you haven't received a penny. That one blew my mind.
Right, yeah, it's like the eliminated probability, I think, is part of the criteria.
Yeah.
Right? And I think that was part of one of the pronouncements. I think that was the, well, it's in here.
But then you also have to create a policy about what you will do with the ungiven.
Yeah, and
But
then
you
what
don't
we
have
will
to
do,
do that.
and like, at what point is a pledge, we had to come up with a whole policy of at what point is a pledge unfulfilled, and then have to go back in and basically remove that from the books.
Right, so what is your criteria? If they moved out of the country?
No, we just said, no payment within a year of the pledge due
That's probably-
date and a lack of communication.
Yes.
Because we've had a couple of people reach out this year and be like, you know, things aren't so awesome as they were last year, you know,
Right,
can I
yeah.
pay you in September, not in March? So
Right.
that we say that's still solid, it's if they've ghosted us, basically.
Right,
And
yeah.
we've only had one do that.
Right, yeah. I'm surprised that they have the pronouncement read that way. That's because it kind of goes against most of the rules in accounting, where you're normally conservative. The principle of conservatism is probably none of them. Where you're going to report things when in doubt in the most conservative way. Show the liability, reduce the revenue, whatever it is. And that's typically what we'll do. So I'm surprised they'll say, yeah, any pledge. We're really ignoring the probability component of the report. I would agree. All right, so a couple others are unrecorded legacy gifts. Anybody have are you guys beneficiaries of like charitable trusts? Anything coming your way where donor says, yeah, I really love you guys. I'm gonna love you even more after I'm gone.
Yeah, we have two.
Two. Is there, are they recorded on your books, the present value of future interest?
They were recorded in our capital campaign, because they were both for that.
I see. The criteria is, like let's say I set up a charitable remainder trust that says I'm gonna put property in a trust. It's usually for tax purposes, right? Because I get a deduction for that. You set a portion of the value. Then it gets sold by the trust tax-free. It creates an income stream to the giftor, right? Usually it's great for underproductive property, like raw land, right? Low basis, high value. You're avoiding income tax on the sale because it's being sold to the trust. Creates an income stream back to the giftor. Then, after either one or two people gave the property to the trust, once they pass away, then the remaining property goes to the charity. It's a concept of the charitable trust. The charity gets the remainder. So then you have to value what that remainder is. Okay? So I put $1 million of property into the charitable remainder trust, and I say I'm going to give it to the El Dorado Community Foundation once I'm done getting the income. Right, that's all Kristen, yeah, that's perfect. So then, for the foundation then, what is their reporting requirement for recording that future gift based on the fact that we're named as the beneficiary? And these are legacy gifts, right? And the tax planning component of this for the gifter is fantastic. It's like, not just a home run, you hit a home run out of the park and it's in the McCarty Code. You create an income tax deduction, you're avoiding capital gains tax, you get an income stream, and charity benefits. Now, the end part of that is how does it affect you guys? And so normally the criteria is there no more ability to change the beneficiary? Right? Because I'm going to give it to the El Dorado Community Foundation, and that's it. I can't change it. If I reserve the right to change it and said, you may change my mind, then it's not something you record in the books. But I guarantee you, there are legacy gifts out there you guys don't even know about. Right? So then having communication with your donors about this is important. Now, you can't just say, hey, do you have any legacy gifts for us? No, just blink once, but yes, twice, but no. I have to blink. Anyway, but I do see that it's either improperly reported or not reported.
Well, and I think you bring up a good point of the advantages of a strong community foundation, and sometimes that they're taking, to manage those funds in the bigger umbrella for the smaller nonprofits, like, just all the, the community foundation overseas with donor advised and, legacy gifts and things that it's all.
Legacy, I agree. And legacy gifts can benefit you guys, right? Anybody. We can choose anybody. My clients do it all the time. But most of the time they have the right to change it. Right? That's usually the standard. Because they may, I don't like those guys anymore. You can change it. There's nothing wrong. It's not you, it's me. All right. So we talked about some revenue recognition errors. You mentioned pledges. This is one of them. But whether they're donor restrictions or without restrictions and how it's been evaluated. And then the functional cost allocation. We'll talk about how that works. All right. So, Bill, did you want to talk about accounting for grants?
It's accounting for grants, which can be a challenge for nonprofits. Going back a little bit in my history, I come from a corporate background. My first position working with a nonprofit was in the East Bay, and that nonprofit did AOD services, alcohol and other drugs. Mostly a lot of state, county, and federal contracts. They served about 12,000 people a year that were going through the program. And I was hired on as the operations manager, director. I got to know the accountant really well because we did have to interface as operations. I needed to know what was in those budgets as far as grants. And what I did was on this is a mock-up of those spreadsheets that she had. She would keep all the grants on an Excel spreadsheet. And that's how she would track cost. So in this case, I made up one, Whiskers Are We. That's actually from Saturday Night Live. It's one of my favorite skits. And Whiskers Are We has their cost centers. So they have compensation, program supplies, mileage, information technology, cleaning service, travel, and so on. And there's a grant that comes in, so they have an approved 2023 budget. And you see the totals there. And then the grant comes in from the Roby Family Grant and for cat rescue that starts on August 1st. And she would always list the dates because that's how she would know when she could spend those dollars. As approved grant budget, and that was what was applied for. So application came up to the Roby family, said we would like to request, what is that, $14,000, and this is our budget and how we're going to spend it. And so this was approved and sent back to Whiskers and Weed. You can see that it has the match back to the cost center, and then this money is spent, it's going to be allocated in the actual. And then that's going to link back up to the consolidated, which would be the approved budget. Is everybody with me? Okay. This one is a little bit, this is for mittens, so this is a different program. So there was cat rescue, now we're at mittens for kittens. So it's a program under Whiskers and Weed. Now there's 3 grants, Mittens for Kittens, Women's Fund grant, SBCA grant, and an El Dorado County grant. 2 of the grants have the same start date. The El Dorado County grant has a start date of October 1st. So that grant can't be utilized until that start date. So Marnie would, who was the accountant where it was employed, would start billing the other 2 grants. And she would put in, so this is the actual approved grant, there would be the actual line item that's going to go in this column. And she would spend down that grant and allocate every month part of the financial funding for that program. And then it would wrap back up into Mittens for Kittens, and then that would wrap back up into the consolidated. Now these spreadsheets that you would have would be massive. And what I found was I visually connected to them because I could see across the spectrum where if it was in QuickBooks for nonprofits, you can still put these in, but visually I don't get the same connection. So it was much easier for me to work off of her Excel spreadsheet and look how much have we expensed off of the Women's Fund grant? How much do we still have left? Do we need to raise some funding for this? Are we expensing more than we thought we would? But it also served as a mechanism when it comes to reporting on that grant because the information is just all right there. What my biggest fear has been being a director of a foundation is we cut grant checks out and they're going to go into a bank account and then disappear. And that the organization's just spending without accounting for each restricted grant. In this case, these are restricted. And then they report back, yes, we just spent according to what the budget was. And that doesn't give us a real reflection of, was there a need in something else maybe? Did we miss something in your budget that you could have utilized? Did you underspend in an area? Why did you underspend? Why did you overspend in an area? Did you need more funding? And that's where Kathy comes into the play, where there's exceptions and requests for modifications of grants.
So you didn't have it as one of your, examples, but we do P&Ls each month. So we can see the budget line, we can see what we've spent, and we can see whether we're over or under.
For each program?
For everything. Every single
Is it
line item.
consolidated, Jude, or is it for each program?
It is, it's for every program.
Okay.
For every line item within our
So you
budget.
have a P&L for every program?
No, we have one P&L, but every program is listed.
Okay.
So for example, every single grant is listed. And then, we have budgeted when we're likely to receive that grant. And then whether we're under or over on expenditure of that.
So the cost allocation, the accountant's putting it to that grant on that line item on your P&L.
Yeah.
It's basically the same thing.
Mhm.
Yeah. Just for me visually, it was easy to see it across the spectrum. Because other new grants would come in to support a particular program, and that was the way I was updated from an operations standpoint to say, oh, okay, we're receiving some more additional funding. Is this the best place that we're allocated, or is it restricted? Is it unrestricted? One of the things when I was working at this nonprofit that I became very used to is they never fundraise. And when I came to El Dorado County, I found that was quite different. But there, they never fundraised because everything was paid for, because most of it was court mandated. That was the biggest reason.
Well, on that spreadsheet, how do you keep track of time? In other words, you've got the grants laid out this way, but does this keep going for the life of the grant? Or is this a per year or per month?
It would go for the life of the grant.
So you would keep, and it would just be a running total, you just keep adding to it?
It'd be adding, according to, that we know that we want to spend this down by 6/30/24.
Right.
Right. So it'd go for that term. Now, if we're rotating as this one does, it goes to 9/30/24. It's a longer term grant. And that, so these two would drop off the spreadsheet, that one would stay. I think on the other one, it was a 2-year grant. So this would stay over a 2-year period, so it wouldn't drop off. So it's just a way to track grants when you have multiple grants. Because I know there's a lot of organizations that use blended funding to help pay for the cost. So even if you have a county contract or a state contract or federal, a lot of times you're bringing in additional revenue to help pay for that program. How to track employee time is going to be totally different. I mean, you can shadow the spreadsheet, and by building underneath this a time allocation.
And we'll talk about time allocation in the context of direct and indirect costing for programs, fundraising, general administrative. We'll cover that here soon.
So this is the consolidated financial statement, so everything sweeps up. So you're, in these Excel spreadsheets, you're linking the cells to bring all the financial numbers forward. So on each individual spreadsheet, they're linking to the total, and then, so it would be, on Mitts for Kittens, it would link over here, all these expenditures would link here, and then link up here to the actual. And then the cat rescue would link there as well. So everything's sweeping up into the consolidated. Who has a consolidated? Nobody?
Well, I think at the end of the day, everything's like
Yeah.
June was saying, that it's broken
It's-
out, but it
yeah.
comes into the big picture.
Yeah, your financial statement.
Yeah, imagine you all have consolidated financial statements at the same
Yeah.
level, right?
Yeah.
Right.
It's a question of how much detail you have by functional category, right, by
Right.
programs, et cetera. That's the challenge.
Don't you feel, Bill, just in our local opportunities, that the expectation, the bar's been raised for accountability and, showing receipts and, kind of tracking that detail, so that in some ways it's complicated, but it also is simplified because it's real clear. There aren't gray areas. This is what you said you were going to use your grant funding for, and you track it accordingly to be able to show that.
Right. There's a lot of philanthropic organizations are really starting to focus in on that, is that you're spending according to what you said you were going to. And if not, they will not hesitate to recall that grant.
I would say the only program area where we have more than one grant applied to it is our general programming actual core of operations, and that's 2 state grants. I'm finding grants now are very much like you either have to buy a specific item, or you're looking for something to be funded that maybe is more on the capital expense side, or they want you to do a new program.
So, but you get Tahoe Women's Community Fund.
And that's generally been for a specific thing. Like last year it was Chromebooks, so we bought Chromebooks.
But does that become its own cost center?
Yeah, it just
So you can track it?
yeah. But it's simplistic in that here's the Amazon receipt.
Yeah.
And we bought exactly the money you gave us.
How many deal with blended funding for program support?
We've got, I guess with the Caldor fire that you spoke of, we've got various grants for Caldor, which is pretty broad. And so when we do work that's related to that, we then allocate under that Caldor to which specific grant might be. Is that what you're
Yes.
meaning by blended? Okay.
Yes.
Yeah.
Yeah.
That's
So
probably
you've
be the
got-
biggest one for us.
So you have a program as Caldor Fire Recovery,
Yeah.
and then you have all the grants, but everything's sweeping back to that Caldor Fire Recovery. But still, you're allocated for the grants.
Yeah.
So you can say, this, I did spend this much on this grant.
And we're using QuickBooks and then expense accounts for each specific grant and then classes to track it too, so.
Yeah.
Yeah, that's what we do.
Yeah.
Every once in a while, we run across a nonprofit, usually the ones that are just starting out, that don't follow this, that the money's just going into the bank account, and they're not tracking the spending.
Yeah. It's intimidating, but it's good if you can do it and you can pull good reports out.
Yes.
Yeah.
And that's really what funders are looking for,
Yeah.
because they're investing. They're not giving anymore, they're investing.
And on
So
that
they
note,
want-
we'll talk, I guess, with labor, but I brought in a new payroll system and then have the same expense accounts and classes with that. And then we allocate everybody's pay specific to hours worked and days worked. And we can pull reports out for that too.
And allocating it back to
Yeah.
their actual program
Yeah.
that they're working on.
One thing I noticed with the grant that I recently wrote that I'd never experienced before was they wanted to have your budget versus actuals.
Yeah.
For history, like in
For
the.
that year.
Stuff.
Are they asking for the entire organization or for
The entire organization.
Your budget to the actual? Yeah, that's not unusual. We're starting to see that more in philanthropy, where they're asking to see maybe even 2 years. Because what they're doing is they're looking at your cash flow and at your activity. So this is a way for them as a funder, are you stable? Do you have a track record of stability that's going to show up on your financial reports?
And I think that gets tricky, as Jude pointed out, that grant that's gonna be not happen for a while, and it's a great big one, so it makes it look real flush, and then.
It's the same as pledges, because you're
Yeah.
booking them as cash. It can really inflate your value, then all of a sudden you have to write them all down, and you have to explain to your donors why all of a sudden
Why you
Don't have to.
your bottom line looks much different than it did 10 months ago.
We should have shown last year that we were $7 million more, because then the operation as well would have been close to a $10 million nonprofit, and that's just so not true.
Yeah, when I started at the foundation, there was a caliber campaign that was taking pledges for Oak Ridge High School, and it was clearly not going to be advantageous for the foundation to continue that relationship. The tracking, the calling, the follow-up, and then writing down pledges that weren't going to come in. It's a huge amount of work. That's it for me. Dan got a break.
I think you guys got a break. All right, thank you, Bill. All right. So I'm gonna switch gears here and talk about a topic I think you guys should be thinking more about. That's not pleasant. Okay? Dare I say unpleasant. It's fraud and asset protection. Have any of you had any kind of fraud, misappropriation, embezzlement, that maybe you know somebody who has? within your organization? Have you worked with an organization that's ever had that?
Humane Society up here,
Humane
they
Society.
issued, what, 6 years ago now?
Yeah.
Wow.
5?
Awesome. Well, one of the first audits I was working on when I was an accountant was for a nonprofit called CYSA. It's the Youth Soccer Association, and they're based in Pleasanton. Right? And it's an organization that supports kids' athletics. That was the sole reason for their nonprofit status. And they had a fair amount of cash, in my opinion. They had a couple million back in the late 80s. I thought that was a lot for a nonprofit to be sitting on. And one of the things they were restricting that for was to build soccer fields in Stockton. And they were build this whole soccer complex, and it was there to serve for tournaments and Olympic development and all that stuff. And so we went and did the audit. I mentioned how we do a balance sheet approach when doing an audit or evaluating the accuracy of financial statements. And one thing we'll do is as auditors, is to confirm cash. Now they had all their cash, I think it was Ironstone Bank, right, and the East Bank, and it was all there, right? And then regardless of the FDIC insurance issue, we went down to do that audit, and there was a new bank account on their books. And we said, well, can we get the bank statement for that? And what they gave me was a canceled check, right? So it was $20,000. Give it to the executive director. Said, well, give it to the CEO. He made the deposit. Here's a copy of the canceled check. Here's documentation of our account. Of course, we sent and she said, well, I'll get the information to you. And then you're busy doing an audit, right? You've got all this stuff to get done, and you have a week or two to do it. So the audit, the bank confirmation came back with a different amount, somewhat less than that. Right? And we said, well, we still haven't received the bank statement. Can you get that for us? Because we'll need that. And the same response was, well, we'll get it to you. Whenever the CEO is back in the office, we'll get a copy for you. Well, then we started going through doing the testing of transactions. So we'll select different accounts. We evaluate what we think is material, but we'll select specific accounts to audit them anyway, based on our judgment and experience. And going through those, we saw some invoices that just didn't make sense, and the classifications for those. And so we'd asked the executive director about it, and she said, oh, well, these are for land clearing costs and other costs associated with this new project out in Stockton. But they just didn't seem to line up, right? And so I pulled out additional costs that didn't look right in terms of classification, and I was still carrying my bank confirmation, and the executive director just turned white as a ghost, right? She now figures out there's a problem. And what the issue was their CEO was the one who was stealing. Now, this person's name was synonymous with soccer, or youth soccer, not just in California, but regionally. He was above reproach. He was someone who was looked at as, it would be impossible to consider this person doing anything other than supporting youth sports. Well, he was submitting he was a contractor, and he was putting in some of his contractor invoices in for payment, and he was approving it, right? And the executive director and the controller were just paying them. And suddenly they realized this was an investment. And the amount, so then they hired us to do the review, and the amount I think he stole was around $80,000 or $90,000. That was the total. Now, what kind of impact if something like that came up on your organization? How would that impact it for you? It'd be devastating. I mean, there's a compromise of trust. There's trust issues now with donors. Would you have a question? Go ahead.
Sorry.
Oh, it's okay. It could possibly impact the solvency of the group. It could impact its status, right? But it shakes the organization to its core, right? And embezzlements and defalcations, malfeasance, whatever you want to call it, is more common than you think. So if you want to have some fun, just get on the internet. What? It's fun.
Sorry. So Dan, I was going to give a quick example because I think most of the people here know. I mean, an extended problem with that is the Humane Society that had problems a few years ago, and now the Humane Society of Tahoe Truckee. I mean, can I give an example?
Yeah.
Because Bill just did this. Humane Society of Tahoe Truckee, which was located in Truckee, has come down here to fill the role that happened with the Humane Society of Tahoe, of South Lake Tahoe, whatever it was. But this Tahoe Truckee is a completely different organization, but it came up with Bill when he's like, wait a minute, we're not getting there. because the name is similar enough and sticks, and this poor group that has nothing to do with what the Humane Society of South Lake Tahoe did is completely trying to override this fraud that happened
Your
years
name's
ago
getting
now.
dragged into it, whether it should be or not, right?
Right.
Absolutely shouldn't be, but it
Well, look
is.
at scouting. I mean, completely different issue, but I mean.
Well, to add to that point, I just got on the internet and typed in Sacramento embezzlement, I think arrested.
Oh my gosh.
Sacramento embezzlement nonprofits. So I limited it to Sacramento and nonprofits. These are just nonprofits that were somehow publicized over the last several years for embezzlements. I didn't include commercial. I didn't add Bay Area or California or the U.S. Look at some of these.
Some of them are.
Well, look at the third one from the bottom. And this one where it's just to your point, Kathy, and that's hard to read. But this one was a California married couple pled guilty this week to mail fraud and tax evasion, whatever. Court documents show that Clayton and Geraldine Hill will operate on your fee, which is also known as Family Resource Center. There are other family resource centers. Right. Right. So someone says, oh my God, they're stealing the Family Resource Center. I can't get my money there, right? Tarnishes reputations. These folks stole $1.35 million and donated clothing and other items by falsely representing to donors that this would be given to needy recipients. And guess how much out of that $1.35 million they actually gave? $13,000. This is what they're tarnishing tarnishing others' reputations, stealing from needy kids.
That's 9%, that's pretty out, that's 4 hours.
So then in terms of the portion you actually give when you're stealing, what would you say is a normal one?
28% better than
The other one I noticed was the one that reads Monterey, California. I'll read it to you. A Santa Cruz woman who founded a nonprofit to provide services for children with disabilities and special needs was arrested on suspicion as she embezzled nearly $700,000 to live a lavish lifestyle.
Oh my God.
Executive director of Central Coast Kids and Families in Monterey is booked in jail on charges of embezzlement, money laundering, and tax evasion. This is just 2018 for $700,000. Wow. To maintain a lavish lifestyle. This is just a smattering, right?
I did attend a fraud seminar, and I felt like a lot of them were like, we're not trying to give you ideas. It's like, oh, if you do this bank account.
This is not crime school. We're not going to go through methods of demarcation, right? We'll talk about it a little bit. But this is just a smattering. I spent 5 minutes on this, right? Clip, cut, paste, done. Next slide, right? I promise you there's more than this that's actually going on. This is what actually got publicized. A lot of nonprofits don't publicize it. Why? All the reasons it's not right? That COISA didn't publicize it. Now, since 35 years ago, I don't care if people hear about it or not. But they didn't do it because they didn't want to have publicity. And that's something that a board has to consider if they do find some kind of malfeasance or embezzlement.
Did he at least get fired?
Jail.
Yes. He was still over the board, but I didn't think he went to jail. Now, I remember there was a, years ago, one of our dental clients had a bookkeeper who was embezzling. He just fired her, but didn't press charges. And about 6 months later, another dental client emails us, where's this going? Hey, here's some bookkeeper we want to hire. What do you think? Here's her resume. And I said, no, under no circumstances should you hire this person. Right? So they just bounce from place to place. All right. Well, we're going to get into some more detail. All right. Embezzlement myths. Nonprofits rarely have issues with fraud, right? I asked you guys how many, no one here, right, but you knew of something, right? But the idea is, well, it doesn't happen here. These are all honest people. Everyone here is a really good person. We try our best, but we're understaffed. It is what it is. Our auditors will catch this, so no worries. Should you be depending on your auditor to find a fraud, embezzlement? Well, we hope we find it. That's not our main job. No, we found it for CYSA, but it took some persistence, right? We could have just said, all right, well, these expenses look fine. Yeah, the cash confirmation's off a few thousand. They have $2 million. Who cares, right? And one of the things we used to do was audit their petty cash. Petty cash at $300, right? Is that material? If you ask your CPA who's doing your audit what materiality is, I promise you it's higher than $300. And one of the problems with doing something at that level is you may set the standard at $300, and if you miss something as an auditor, then they're going to say, hey, you were auditing petty cash, what are you doing? But we did it anyway. Why did we do it? Why did we audit petty cash? It was a shot of the bow, right? It was like, we're in here, we're watching everything. We're watching the pennies and the dollars and everything. Hands where I can see them putting in petty cash, right? Now, when I audited petty cash, what did I find? I found 2 checks in there, one from the controller, one from the senior accountant. One was for like $50 and one was for like 25. And they were like 8 months old. So what were they doing? They're cashing little checks, right? But they weren't really cashing them. It's like that joke about the funeral, right? Oh, I loved Ed so much. I'm putting $50 in his casket, right? Well, the next guy doesn't be outdone. So he goes, well, I love him even more than you. I'm putting in $100. Next guy goes, well, I love him the most. So a check for $500, took out the $150 for the casket. The check doesn't get cashed. That's the idea.
Yeah. We actually had an issue a couple of years ago where, and it wasn't fraud at the organizational level, but they got hacked.
Okay, we'll talk about that too.
And they've been emailing scans of checks. And so then the hacker took the check, copied it, and then withdrew a ton of money.
Wow. Yeah. Yeah, that's something easily done, right? So I have a check here. This is why I'm actually talking about this. This happened in my office this last week. So I have a check here from a check that we wrote for payment for services. We use admin services at times. When we get really busy, we use a staffing agency. So we wrote a check for $1,239.90, a small check. But my office manager doesn't give up on anything. Because they send us one of these, we pay them once a week, we did it for a few months. You can get a little lost on what those invoices are, but she said, no, I know, I paid you guys. What's unusual about this copy? What do you see on here? That you would,
The bottom is black.
Yeah.
well, this is the front, and this is the back.
There's no endorsement.
Endorsement.
Yeah.
There's not a bank.
Deposit
Oh, a
stamp number.
Right, is this any of your signatures?
Oh, it's the signature at the end there.
That's the endorsement.
Oh, wow.
Oh.
This is fraud as to the endorser, right?
Oh.
Took a basic business law class, that's what this is, okay? So how do we catch it? Well, luckily, my office manager's on it, just doesn't just simply pay it. But how do they deposit this? How does this get into someone's account? Someone just can't say, yeah, hi, I'm a Search Pro Staffing LLC. I'd like to cash my check, please, right? So how does this get deposited? It's probably done remotely, right? We get now the kids, click, send, let's do it. It's probably a remote deposit, right? Taking a photo of it, it takes time for that to get caught up to, right? That's probably how it got it through. This is a small amount. They're trying to do it with a CPA firm. It's not gonna, we're gonna catch it pretty quickly. But it took time. Now they've got something called positive pay, right? So I went down to the bank. They said, well, we can either close the account, which would be a major headache, or you can go through this positive pay program. You have to then tell them who you're writing checks to and who the pays are, so they can approve it. I said, that's a great program. How is it going to stop this? They're going to say, well, we're going to process a check for Search Pro Staffing. I go, yep, that's them. Right?
Well, and like you said, the process of prevention's way better because the process
What's
of
that?
like prevention,
Prevention, yeah.
right? I mean, I'll say that, but I'm thinking about even when you have an issue. Like I've had an issue with someone who passed away and someone put in a life insurance policy that we didn't know about to their name, wired it to themselves, and it's amazing. You call the police and they're like, oh, we're not going to do anything about that. So then it's all on you. So it's
They don't care.
I mean, we obviously have these like larger situations that they care, but there's just not a lot of checks and
If it has some teeth, they'll dig into it.
Right.
Smaller investments, we don't have the staff. We don't have the time, but we don't care.
Just to like some
Do a better job of protecting yourselves. What can I do here? We mail things out of our building. It's a very secure mailing area. I know it didn't happen on our end, right? I imagine it got to their end, and somewhere from when it got delivered to whoever got a hold of that check, it got stolen, right? Unless the mailman, but I could have him sign something for me and scribble. Right? But that's something simple that even positive pay is not going to catch. But I can promise you, there's issues out there for all organizations. It's happening. Right? But why does it happen? Right? What's the what creates the environment for embezzlement? Have you guys seen this before? The fraud triangle. Remember the accountants? Okay, to have we're talking about it for a couple minutes. So to have embezzlement, the theory is you're going to have 3 components: motivation, rationalization, and opportunity. As accountants, which one of these are you involved in? I don't mean as people who are stealing.
Opportunity.
You're limiting opportunity. It's the whole set of internal controls. And it's not just you guys. everyone's involved in it, right? It's from the top down. It's the integrity of the organization. You're not tolerating things that are unethical, right? It's how you guys develop your reputation. But the idea is that with enough motivation and rationalization, and they have the opportunity, someone will steal. There's a concept of 10-80-10. Anybody heard of this? I was going to make it 15-80-15 to see if you're paying attention. All right? Maybe criminals give 110%. You know, like, spend 9 days on this stuff. The idea is I can give you a sack of cash, big sack of cash, and say it has to get to the bank in the next hour. I haven't counted it. I want you to count it and deposit it and tell me how much money is there. And it could be that your child is an operation that's going to save his or her leg, and you need the money and you don't have it. And what you do is you take that money, you take it to the bank, you deposit it dutifully, and you give me the deposit slip. You will not steal. You're that 5-10%, no matter what opportunity is in there, and no matter how much pressure you have, you're not going to do it. Okay? Then there's other 5-10% that they'll do it at any opportunity. If they're just given the opportunity, give us a chance, we'll do it. They're sociopathic, they're going to steal from you, given the opportunity. The other 80%, with enough rationalization and motivation, enough pressure, will do it. That's how good people do bad things. It happens. Right? So, why do trusted persons commit fraud? Because they've got issues going on. Okay. All right. So it's part of this fraud triangle. Now, I didn't come up with this. It's been around since the early 50s. Apparently, there's got to be a non-shareable problem, an opportunity for trust violation, and a set of rationalizations that define the behavior as appropriate. They convince themselves this is okay. Okay. What types of fraud? Let me finish. A little bit of that over here. Let me just go to this slide first. What's the motivation? What motivates someone to steal? What pressures are out there? Right? A divorce. Not everyone gets divorced when they steal. No. Right? But it's a financial. Potentially a financial problem. I'm not saying that people are going to steal. Bankruptcy. Do people go into bankruptcy steal? No, not necessarily. But it's financial pressure. Okay. Lifestyle maintenance. If you see someone who's making $50,000 a year in your organization, and they're driving around in the Range Rover in the parking lot, or have the Patek Philippe watch. Well, no, we're gonna watch.
Okay, oh no, you
But no, we're watching. His lifestyle maintenance. So the CPA down in Sacramento who got hung up on this, and he ended up stealing about $13 million from his clients. He did IRS representation. That was his whole niche. And when you're in trouble with the IRS, you put your head in the sand. You don't like it, right? You avoid facing the issue. And so if you're getting notices showing a large balance of due, you're not paying attention. You're just sending it to this guy saying, hey, they sent me another notice. Oh yeah, don't worry about it. We're taking care of it. We've already gotten your installment agreement. It's just a little late to get it going, right? They're putting money into his trust account he was just taking out. He took out $13 million, right? Because people trust. He was in a position of trust, and he was trying to maintain his lifestyle. He couldn't keep up with it. That's why he did it. That was his motivation. He had the opportunity. And he's somewhat sociopathic. Drug and alcohol addiction, unfortunately, and gambling addiction, a big one. You get behind in debts, right? You're going to do it. So, most fraud perpetrators don't view themselves as criminals. They don't see it that way. I'm a good person who just made mistakes. It's a bad thing, right? Then rationalization. I'm just borrowing the money. I plan to pay it back. I hear that one often. So my client called me and said, it's a large pest control company, several places, offices in Sacramento. Called me up and said he was changing his banking relationship. And how he did check scanning as part of the deposit. The banker said, well, what are you doing with your cash deposits? He said, well, that's a great question. Let me ask my controller. The controller said, well, what I'm doing is I'm depositing into my personal account, and then I write a check back and because it's hard for me to get down to the bank. I didn't know what to do, so I was just doing that. And he called me and said, should I be upset about this? I said, no. You should be in orbit over this. You should be volcanic.
Yes.
You should be on the desk screaming at this. Yeah, upset would be too much of a turn. I promise you, she's stealing with you. He said, from you. You think? Yeah. Okay, there's no excuse for it, period. And sure enough, she had the opportunity. No one else was tracking the cash. People were paying their bills in cash, she was taking it. $300 at a time, no one caught it. She thought a little is good, more is well. better, exactly. Until she got mail.
We used to make, for like when we need bank for events, we used to make the check payable to cash. And we weren't very good about okay, well, exactly the same amount has to be paid back into the bank account as we took out for that one. But now we just make the check out to the person, because then at least we're like, you took the money out. Like, it's just like an accountability piece.
There you go. How many of you have volunteers handling cash? Handling money, handling checks? Anything financial?
Only in events and only board members who are background checked.
You've already said only events. Okay, so the answer is yes.
Yeah.
Yeah, okay, good. Anybody else? Yeah, some of you do, right? Are they always going to honestly report to you? Yeah, I think so. They're already good people. Otherwise, they wouldn't be volunteering here. And we can spot a criminal a mile away. Right? That's how we protect ourselves. But are you? Okay. And now, doing things like you're describing is important, right? Now, what if two people get together and decide to steal? Well, that's collusion, right? That's a problem. It doesn't happen very often. You can't protect yourself from everything. But setting up checks and balances, having standard procedures for how you're handling assets and cash. But what other ways can you steal?
So we had an issue with gift cards.
Okay, gift cards. That's a great example.
Yeah, we would get gift cards for program expenses, and we had to have a dual system now to where two people, if somebody gets a gift card, there's another representative, another employee that watches that person get the gift card both sides. Just for checks and balances.
Good idea. Yeah. Vendor, well, let's see, I've got my list here.
We just try to get a receipt and everything as well.
Yeah. You said you tried to. That's good.
There's,
I heard that was Paul from there.
the car wash.
You say,
The car wash
"Pete, get us
doesn't, the car wash doesn't give you receipts. It's paid in that.
Well,
And
you know,
valet,
just stand there
valet
now.
doesn't give you receipts.
I'm not leaving until you give me a receipt. And there's cost benefits to, you don't have so much, right? What's the biggest challenge for limiting opportunity in a nonprofit? Why is it so hard? What's the biggest issue?
Staff, not enough staff.
Segregation of duties. Do you have enough people? Now, if you had unlimited funds, we have a system where we can almost guarantee you won't have even a possibility of investment, but you might throw it. Back to our little curve there at the top of it, right? Well, then you guys aren't taking enough inherent risk of running a nonprofit. There's inherent risk. But what types of fraud are there? So collections on accounts receivable. Who's controlling the collections? Are they also recording against the receivable? Can they remove, void, or delete otherwise remove the receivables and collect the cash? They do that. They have the opportunity to do that. Fraudulent vendor invoices. That's what the guy at CYSA was doing. Right? They were getting approved because no one's really paying attention. Misuse of credit cards, or people fraudulently charging on your card. I've seen that in the private industry, where it was at a trucking company, and one of the accountants had access to the credit card, and this person's significant other was a trucker. Right? And all of a sudden, they're using the fuel. They're spending thousands of dollars, hundreds of thousands of dollars a month of fuel. Suddenly, this person was charging fraudulently. Right? Not a big number, but it added up. Theft of property. All of you have lists of your fixed assets, and are your fixed assets tagged? Do you know who has them if it's outside the organization? How many people have remote employees? Right? So do you have more than one location? So maintaining control over your property is important.
Does that mean I have to turn in my Surface Pro?
Yes, Bill, we have it on the list. Keep your handwriting in. Theft of your checks, right? Theft of cash and special events. I'd say that's probably your biggest weakness. That's where the biggest opportunity is. Or someone saying, "Yeah, I'll take that for you. I'll make sure it gets to the nonprofit."
Cash is a nightmare.
Sorry?
So cash is a nightmare. We used to
Yeah,
run
it
that
is.
with
You guys have lots of cash to handle at times, and sometimes they're volunteers, and they go, "Well, I do the best I can," and that's all there is, right?
We just decided we're not going to take cash at an event later this summer. So even if they turn up and they're like, I want a ticket, I want to come in, we're going to be like, great, you have a cell phone, buy a ticket online, and then we'll scan it.
Yeah, that's a great idea. Anything you can limit the opportunity in that area, I think is critical. Critical. Okay. And then fraudulent time reporting and payments to employees. Who says Frank on here? I don't understand who this guy is. He's getting a check every 2 weeks. Who's actually seen him? Oh, he's in special project maintenance. Yeah, that's it.
I just wanted to say about the fraudulent vendor invoices, we started getting them in the mail, like, oh, you have this domain, send us a check. And I'm like, I don't have this domain. So it's not even, it could look okay,
Yeah.
right? Just like spam email. I didn't realize there was paper mail spam.
I'll try anything, really.
Yeah.
And so we've all got, you guys all get phishing emails, right? Click here, and some of them are so obvious. I think they're obvious. It's kind of a game theory thing where if you actually respond to this, then you're stupid enough to probably give us the money, right? So it makes it really obvious because they want to get rid of that 99% of people who are going to go, yeah, this is dumb. They want the 1%, right? They're the ones who are transferring overseas for the printer needs money deposited to an account, right? They'll try to catch those, but they've gotten more sophisticated. They're now, if they get into hacking into your emails or into your email on your server, they're tracking what you're doing. They may track it for months. They're going to notice your patterns, who's requesting funds, who you're paying, and then they'll try to slide in an email typically before a busy holiday. They'll do it. Right? It happens in my office. And in fact, my IT people, we have a program they rolled out that said, well, we'll send those phishing emails to your employees to see who clicks them. And I go, okay, we're going to take odds. But who's going to click on it?
Oh, good. They played that.
All the odds are on a couple people. Because they're like, as I could say, gullible is not a word anymore. Go, really? Yeah, they took it out of the dictionary. Really? Gullible's still a word, yes. But that's something we do with our IT, our IT, to try to at least then keep our employees vigilant. You guys need to be vigilant also. Talk to your IT folks about that. See who's going to click on it and then sirens go off at the computer side. You go, oh, it was you, wasn't it? No.
There's the couple points. There's a reason why a lot of organizations are targeting nonprofits because they know we're busy.
Yeah.
And so this is a way that they can slip something through. But there's ways you can protect yourself. So Sakina and I, who's our CPA, have come up with a mechanism to know when it's an email from me and when it's fraud. So when it comes across as fraud, and it says William Roby. I never send an email to Sakina using Mo. It's always just Bill. So she'll see that and she'll know it's already fraud. So there's ways that you can internally put something into place that will help, especially whoever is doing the accounting of the organization, to know that this is really from you. But anytime they get something from the outside, they should be questioned.
But just know they're watching, or they can potentially. And they're finding your patterns. They're getting better at it. Before it's pretty obvious. I mean, the wording was funny. I beseech thee to send this following deposit to my account. I don't like that, period. Now they're getting better.
Yeah, I love the one that says, greetings and solicitations from Somalia. Okay.
I was wondering how many have cybersecurity insurance?
Yeah, that's a great question.
To $1 million.
What did you ask?
Cybersecurity
We got a
insurance.
quote and it was really high.
Because of the potential liability is really high.
Yeah.
It could decimate you. It could put you out, put you under. Right? And that's not even an internal threat, that's external threat.
Yep.
Right? So I definitely look into that one. Absolutely.
So nobody's running cyber insurance? Is that what I saw?
We are.
Some are, yeah.
Yeah.
Okay.
Yeah, and I think you should look at it.
Well, yeah, because we just switched to an online platform, which is why I was like, it's probably worth it now.
Yeah, we do a lot with that, and I brought it up last year and didn't get a lot of support.
It's
Show them that
crazy.
list of go on, investment Sacramento arrested or nonprofit.
Yeah.
Give them a list.
Yeah, we just have a lot of like credit card transactions and stuff like that, which is a thing.
Right, yeah.
The FBI office in Sacramento is receiving 300 cases a week of cyber crime.
Yeah, don't be the next one.
Yeah.
Please. It could put you out of business quickly. Tarnish reputations. It's an outside threat. And I can promise you, if you have an embezzlement, the first question your board is going to look at, besides who did it, is do we have insurance?
We had a crazy one about a month or so ago where someone that we had interviewed for a job took Ashley's signature, created a Gmail, which was like her email at gmail.com, then wrote an email saying that he had to go to a training and it would cost $15,000, blah, 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 and then forwarded it to his own mother saying, can you loan me the money? Because it turned out, unfortunately, he was an addict.
Wow.
So, you know, the mother, thankfully, I think, perhaps knowing her son, called our office and was like, are you hiring my son and are you sending him on a training? And we were like, no and no. And
Scaring your own mother.
well, it was interesting because we did submit like the whole like this person's tried to do, you know, false use of our name and business and all the rest of it, and we heard crickets. Like we did a police report, we did everything, and I don't think there was a single bit of follow up.
You should do the police report.
We did.
Yeah, it's a great idea, even if you get nowhere. It may
So,
offer insurance license.
With like the fraudulent vendor invoices and stuff like that, could that have been prevented with like the conflict of interest policy and stuff like that? But
Potentially. Potentially, but it's only good as the person who's approving it
Yeah.
is, right? They may say, oh, well, this is right.
may not know there's a connection or something like
Right,
that.
and they won't know, right? Like in that case of CYSA, they look like they might be related to a project out in Stockton. Look kind of like some contractor thing. And no one really was, there's some lack of natural curiosity.
Just another example, similar to what Bill brought up. I'm not the organization I'm here today representing, but a different one, a nonprofit. I'm the treasurer of that organization. Got an email from our president saying, could you write a check to da-da-da-da-da-da? Somebody had hacked into his email and sent it to me as the treasurer, looking to get the money sent wired
Wow.
to somebody else.
Yeah. Probably in the afternoon on a Friday too.
Yeah.
And I, you know, and usually, again, the president doesn't do that. So it triggered like, you know,
Constant vigilance, diligence,
Yeah.
natural curiosity, and skepticism. You know, double check, pick up the phone, call them.
and a
Takes
lot of
a
it is,
minute.
you know, some of us use our personal emails.
Uh-huh.
And that's what his was, it came from his personal email.
So you take nothing away from this conversation. You go back and evaluate your internal control. We'll cover a few items on internal control. I want to get to some other topics here. But it's so prevalent. It's so out there. I hate to see it happen to you guys. So that's why I'm bringing it up. All right. Some common characteristics to watch out for: intelligence and curiosity. You want to hire dullards. So, kidding, don't do that. Right? Embezzlers are often eager to know how everything in the office works. They want to know everything. They want to know the details. Why? Because they're probing for weaknesses. Right? So you want to hire the lower quartile.
Then you could substitute the term executive director for that embezzlers in that first sentence. That's kind of part of our job descriptions, to know
Who's better?
everything in there. Not for the negative side, but to be aware
Well,
that
according
like,
to you, yes.
yeah, you have to know like every piece.
Sure.
Yeah, no, that's
So,
true. I mean,
yeah.
just because they want to know every piece doesn't mean they're going to steal from you.
No,
but it's a
but it's-
characteristic, right?
That's a good flag for a board to be aware of. It was like you've hired this person and they do know everything, so you need to then do these extra steps.
Well, they know the weaknesses, right?
Yeah.
Yeah, so then extravagance. Watch for employees who are living a lifestyle beyond their means. Okay? Egotistical risk-taking. It's like, this is kind of in the eyes of the beholder. But they break rules, from traffic laws to company policies. Now, I don't know, I mean, I speed. I think they should have prepay your speeding tickets. That's one of my ideas. Local government gets, buy two, get one free. Just swipe card, local government gets more money, it expires into the year. We're all happier. They get more money, I get on my way. But this doesn't mean I'm a stealer, all right? Just means I have good ideas. But they take risks both in their personal and work lives. Diligence and ambition. Diligence, ambition, intelligence, and curiosity. That's like one of my checklists of people to hire. Unambitious, not diligent, kind of slow, and they don't care about anything. You're hired. They work. What do? They work long hours and don't take a day off. Right? Why? Because they're covering themselves. Right? The one who never takes a vacation, make them take some time off. Cross train on jobs. Give people when people get where they're the only ones who know how to do something. That's a risk, right? And that's part of documenting procedures within your organization. So if they do leave, they don't need to take everything with them, right? And then disgruntled employees. They have it coming to them, and I've got it coming to me, right? All right, so all characteristics of those who will steal.
I don't know how she has it, but our auditor knows exactly the one receipt that I didn't initial. And she always asks for it.
She just knows.
She just don't know how she knows.
So what's the moral there? make sure all your, hide that invoice, or easier, take it to detail out of the GL, they can't find it. They can't offer, they can't find it. No, get the approvals. But an isolated incident shouldn't be end up on the management on there.
No,
All right.
generally not.
Fun part.
But she still manages.
Sorry, so this is, I want you guys, we'll make sure you have this PDF, right, the full copy. This is in there. Internal controls consist of all the related methods and measures adopted within an organization to safeguard assets, right, and that's it. We want to limit the opportunity for fraud. So then some internal control systems have various components. I think the top one, making it the tone at the top. You're not tolerating anything that could be construed as unethical, right? Strive for the highest level of ethics, right? Set the tone. But I think risk assessment, maybe that's the most important. All right, go back and do a risk assessment. Where are your weaknesses? Where there's a potential, and then evaluate it. And some, maybe you can't. Maybe there's nothing you can do to improve the problem, but at least you're aware of it and you check it. Control activities. Maybe that's the most important. How are you designing procedures to limit the opportunity for fraud? And then communication. Are you communicating information up and down your organization? Maybe that's the most important. Monitoring. No, I've landed on it. That's the most important. Are you actually following through and monitoring what you're doing? Okay, so all 5 of them are equally as important. Okay? All right. There's various principles of internal control. We've already landed on number 2. Segregation of duties is the most challenging. Okay, but all these are important. Right? I've given you a list here of some basic internal controls you can implement for a small nonprofit. There are only a couple here, right? There's an executive director and someone else signing checks, right? Some basic ideas. If the accountant is would write disbursement checks, but the executive director receives the bank statements. The bank statements ought to go to someone who's not in charge of the accounting function. Where do your bank statements go? Who do they get mounted? And then and you're the one involved in the accounting function?
Yeah, but I don't write the checks and I can't sign them.
Okay, so you have no signature authority. Then that's good. Then you can review them. Do you get to cancel checks with the bank statement? Do you get the cancel checks that go with the bank statement when they're mailed to you?
We don't really have that. We'll have checks bounced occasionally from
Oh, so back in the day, we can't do it now, right? So banks don't, so if you write 20 checks, they would send the canceled check with photocopies of it. So even though a check was written for 20,000, how do you know it really went to Search Pros in my example? Could have been, someone could have taken it and changed the payee or cashier and you go, well, yeah, that's 20,000 for supplies. We knew we were going to spend that. But it really went to somewhere else. And the way to catch that is when you get the bank statement, you just scan the canceled checks. Give it a sanity check, review it. Were any of them altered? If they're not altered, and they all look like reasonable payees, you're probably okay, right? That's just one check. One check and balance you could do in 5 minutes, right? As long as you're someone who's not involved in the check writing function, that's an appropriate way to handle it. Like my bank statements for my company go to my house, personally, my home residence, right? So the accountant bookkeeper may reconcile bank statements, the executive director signs and mails checks. There's some basic ideas about how to split duties and responsibilities in a small organization. Yeah.
In a couple of those, I'm presuming it would be appropriate if the roles were flipped.
Could be.
Okay.
As long as it's segregated, right?
Yeah, that's kind of what okay.
Right. That's the idea. You put basic controls where you have someone, a responsible person, and then someone else check to make sure they're doing what they're supposed to be doing. Right? That's a basic issue.
And then a nonprofit, you could also add that to your board.
You could have the bank statements go to whoever the president of the board is. Right, absolutely. The larger the organization, the more you've got layers of staff, you've got folks internally, you can do this. This is more ideas for
I also think as well as not being able to sign checks, I also have no access to the online banking.
That's a good idea.
Because otherwise, you could just transfer money.
Yeah, and we're not taking notes that you're protesting too much. It's not me. I'm not joking. Look at somebody else. That's all good ideas. Those are all good ideas. All right, I'll make sure you guys have this, the full version of the printout. Utilize this as best you can. It's a small one. It's just my version. You want to write it?
I said no. Just make sure I
Thank you. Chris will make sure you get one. Make sure you all get one.
I've already logged in, I can't, as him, I can't see the.
It's actually written on there, but you know, Microsoft will find it. You need a cover slip and a Microsoft will find it. I know. I was not in charge of that part of it.
I have a couple sites where another fiber that had a cute little, was do give staff 2, 3 to 4, like kind of suggestions of how to look at it.
If you have that, circulate it. Yeah, I was gonna do that, but I only have some time. Yeah.
It's pretty, it's
Oh, that's nice. It makes me feel more, well, it's okay. I feel okay with myself.
no, it's nice for like looking at bigger stuff.
Okay. Personally. All right, so how to limit opportunity. Here's a list of ideas. Duplicate accounts or checks, standard account sheets, countersign checks. Are all your checks countersigned? Do you have more than one signer on all checks?
No.
You probably should.
Do you see 2 board members? So painful.
I'm taking notes now, all right?
We don't let any staff member sign a check, so we'll be tracking down board members every week.
Yeah, I think countersign checks are always a good idea, if it's plausible. If not, then so be it.
Do you print checks? Do you print
You
checks?
guys don't have to buy.
No,
So you don't do anything with it?
bookkeeper does them.
Okay.
All right, I do think SOPs, how to handle things, how to handle the flow of financial information and the assets within the organization is critical. Right, and then monitoring those SOPs, make sure they're being followed. Put those in writing. Okay? And then working closely with their internal and external IT. All of you have mentioned issues with phishing, threats outside the organization. It's critical to work with your IT. Right, and encourage whistleblowers. Support the whistleblower policy. We don't want to have an organization that says, oh, you know, snitches get stitches. That's not.
That's trail.
Back to work. No, we don't encourage it, right? We like tattletales, right? Gossip, do it, okay? False accusations we're not too cool on, but you got to do it, work it over, all right? All right.
I think focusing a lot on like the investment side, but I was also thinking about the importance of having like clear systems for when we handle like all the social security, their own information, other people's private
Yeah.
information. So I just feel like that should be a layer that is important too, related to finances, related to
Personally
their
identifiable.
social
How do you handle
numbers,
sensitive data?
their bank data, like all those things too.
Yeah, in a lot of ways you guys have the keys, right? You got a lot of information on this. You have their dates of birth, social security numbers, bank account numbers,
I feel like,
credit card numbers, all that.
We are making a huge effort to do it, I just wanted to
yeah,
mention.
well, and I just feel
That's a
like
great point.
poor Molly, we seem to be doing nothing but writing policies recently. Like the most recent one was, you know, how are we handling people's background checks?
Digital protection.
Which we can only access online through the Department of Justice website, yet they still wanted us to have a policy on that, like how we access it. It's kind of, which, I mean, it's great, it's just a lot of policy writing.
For a reason, unfortunately, but you're right. Yeah, no, it can get tiresome. And one thing to have a policy is not going to follow it. Right, so that is ultimately the issue. So what happens if you suspect fraud? Right? You just go thundering in, call a board meeting, go, oh wait a minute, I'm sorry, misread that. No, cancel meeting. You got to be real careful how you tread on it, how you move forward, how you investigate. Be careful accusing anyone early on. You want to have a discussion. You want to get things sort of to be transparent as best you can. Oftentimes they're going to want to tell you. Right? They admit fairly quickly. Right? There are times they don't. Right? But if you're deciding not to investigate, the board needs to document why. Why are they deciding not to investigate? Okay? That is, and it's no blanket observation for them, right? It's facts and circumstances. Okay? Did you hire a forensic accountant? Forensic accountants, I think they're worth their weight in gold. Not because I'm a CPA. I don't do forensic work, but they do an awesome job. They're the right person. They really will. Decide whether to report to police. The negative publicity is worth it. I think you should report it to police. I do. I think you should take the hit. Maybe require for insurance. It's true. make reasonable efforts to recover lost funds. How do you get restitution? Okay, and you're not going to do it. It has to be documented in law. Then you have to report. So this is diversion of assets, and it has to be reported on your both on your 990 and your RRF. The Registry of Charitable Trusts, the Attorney General's office needs to know about it. And if you don't, then you're exposing yourselves to a risk. Okay. And how do you improve internal controls, prevent the reoccurrence, and again, it's reported on the 990. Any questions on fraud or trouble? Be done with that. All right, get legal counsel, contact the board, consider, well, the procedures are confidential, all right? And then be careful how you accuse. All right, let's talk about something only slightly more pleasant, taxes. The 990. Now, again, did some of you do your own 990s, right? I thought I saw a couple of hands go up. Yeah, okay, all right. So here's the filing threshold. It's due the 15th day of the 5th month, right? Makes sense, May 15th, your calendar year end. Less than 50,000 assets at 990N, I'm sorry, receipts, the 990N, between 50 and 200,000 at 990EZ, and more than 200,000 of gross receipts, it's on the full 990. Our software takes care of that, right? It'll just spit it out. Right? We don't have to even consider that. But those are the filing thresholds of what you get. Now, a couple of tax issues I want to talk about. Anybody have unrelated business income and pay a tax on it? Maybe you filed a 990T.
We don't ever have enough.
To have the tax.
To have to pay
So
the
you guys
tax.
are doing a great job of cost allocating.
Yes.
Income for us. Nice.
Well, could you give us an example of what that might be?
Yes, let me give you an example. So that the Youth Soccer Association I used to audit had a bookstore back when you had bookstores. They sold
Oh, I
books.
see.
And people wrote there are folks who wrote books on coaching, on techniques, and all of that. The organization would buy the books and then resell them, right? So you have sales tax issues and then unrelated business income tax issues. And we worked hard to allocate costs to it. And they paid a little bit of tax.
So that for us wouldn't be seen as a fundraiser. I'll just give you an example. So we purchase a bunch of hats as a donor thank you. Donors give us donations. We give them a hat.
Donation exceeds the value of the product.
It's different, yeah, it's
But-
different.
It's different.
Yeah, that's not really a trade
Not
business.
for us.
You have to
registry
track
area.
that, but yeah, this is like, just as this example, we have a merchandise shop. We're selling a hat, it's not like, oh, you gave us a donation and as a benefit, we're giving you a hat.
Okay, yeah. That's a good point. We did sell some T-shirts last year, but again, it was for donations.
Those are intermittent, occasional sales. It's not a business. And so we have some standards for what is unrelated business income. One of the key words there is a business, right? It's not regularly carried on by an organization. Right? It's not really something that rises to the level of business. It's more of a fundraiser for you. So what's the tax? So then, if you do have unrelated business income, let's say so they actually have to pay tax. What is the tax rate? How much tax do you have to tax?
8% is that.
Yeah.
Sales tax.
Well, it's sales tax, right? And sales tax, you're going to pay whether you have a profit or not, right? That's a transactional tax. How much is the income tax on unrelated business income? It's 21% federal, 8.8% state. In microscopic writing, it's on the return. It's 30% total. Is it okay? Is that good? No. Do they take it all?
Yes.
No. Feels like they take it all. No, they don't take it all. They take part of it, right? They take 30%. Where's the other 70% go? To you guys, right? Is 70% of something good? Yeah. It's better than 60%. Not as good as 50%. Yes. Some people are You're getting something, right? My point is, don't avoid unrelated business income just because you have to pay a tax. And be creative with how you allocate expenses. Maybe it's not paying much of tax anyway. And if it's providing support for the organization in some other tangential way, right? If people now associate this with your nonprofit, it's not the end of the world. It's not bad. Okay? It just means you got to pay some tax. You got to make sure you're filing. And sometimes it gets missed. Okay? So now, if you're a performing arts group that does youth performances, and you charge tickets to the show, is that unrelated business income? No, that's really part of that would be more of a program. right? Because it's related exactly to the exempt purpose of the organization. We're teaching kids how to do performances. It'd be good if they actually perform in front of somebody. And why not get paid for it, right? Otherwise, we're just practicing, we're never actually performing. So there's some distinctions between what is a program and what is an unrelated business. Okay, it actually can't be part of the exempt purpose of the organization, but it's not necessarily a bad thing. And how much unrelated business income can you have before you have a problem? And not just a tax problem. It's an exempt organization problem. Or when do you no longer have a problem? Interesting. About 20% puts you in, you start looking at you like, yeah, maybe you need to split this off. This shouldn't be part of the nonprofit. It's too much of a good thing, right? 10% is probably just fine.
And you're talking like gross revenues or something when you say
I look
that?
at it as gross revenue.
Okay.
Yeah.
There's not too much we're exempt from in California. I mean, we still pay sales tax on items we buy. I know in Nevada it's a much more favorable position because you don't have to pay sales tax, etc. What would we be avoiding paying as a nonprofit with a commercial arm?
You're not avoiding anything. Yeah, so you still have the same sales tax issues. So sales tax is again, a transactional consumption tax. Income tax is a tax on profit. And they're making a distinction that if you've got something that's unrelated to the mission of the organization, you can pay tax on it if it's a regularly carried on business. Okay? That's the whole idea. Is it a trade or business, regularly carried on by the organization, and not related to the exempt purpose? Those are the standards for unrelated business income. Right? Not a lot of it, right? You're the first person to raise their hand. But it's out there, and possible misclassifications, so be careful. Right? But normally it's a program. Yes, it's okay to make money. No longer.
So I guess for us, like we build trails and advocate for bikes and stuff like that. So if we were to bring an e-commerce platform in to sell socks and hats and t-shirts, that would be unrelated business.
Possibly. If it's regularly carried on, you start selling bikes, come up with bike shops, now you can compete with commercial enterprises.
Yeah,
That would be where it starts looking at you, that looks different.
Okay.
Yeah.
Cool.
All right. Again, the taxes apply to the net income generated from the activities. Good job keeping it down to zero. Any trade or business in which substantially all the work is performed by the volunteers is an exception. Right? Any trade or business that consists of selling merchandise, substantially all of which the organization received as gifts or contributions, think thrift shops. Right? That's excluded also. What about rental income? If you have a building and you're renting it out, is that unrelated business income?
We were told by our auditor, just don't do it.
Don't do what?
Don't charge for rentals because it's a whole different kettle of fish.
Rental of what?
Our building.
Really? Okay. The auditor told you that?
We do it. We charge rent for a building.
As you should.
Yeah.
And you're allowed to. And it's not taxed?
This is like rent for an hour, kind of like.
Oh,
like
I
this kind of thing.
I see.
Not like-
Okay, that's
We're not like renting houses.
But it's okay if you did. Or commercial properties. Commercial property was donated to the Eldorado Community Foundation.
Right.
You use part of it and rent the rest of it out, and that's okay. And the income from that's tax-free. Right? But there's a carve-out for that, Section 512. Rental of real property is tax-free. Rental of personal property would not be. You're renting out equipment. But rental income is okay. So you're allowed to have it, and you're allowed to use it to create income for the organization. Now you're in the business of commercial real estate, right? So be careful. What about games? Anybody do like games of chance and bingo, that kind of stuff?
With a raffle permit.
About the permit, yeah, actually, I think it's a permit, yeah. No real business income, no business income tax there. So I was wondering what you guys are doing. So then the takeaways are okay to have UBI, which is not too much. Okay. They don't take it all, but then too much could be, I'd say less than 10% is totally safe. I wouldn't even worry about it. Anything more than 20, I'd be very worried about it. Okay? All right. Donors are watching. Anybody get their, have people ask for their 990? Say, I want to see your 990.
Every single grant.
Okay, but how about the public?
Carrie used to like to ask Martin a lot.
And then when they get a copy of it, what do they ever respond and know what they're looking at? And ask questions?
They just go right to the initials of your top.
The compensation of executives. That is on my list here. That's what they'll be looking at. That's one of them. And what's another one? How much is to general administrator, statement of functional expenses? So look at that. And they'll go back to, well, you're spending X amount. And my friend's nonprofit spends less than that. What do you think of that? I have nothing. Thank you.
Great answer.
We're running a crappy organization too.
I have a problem with that. Okay.
All right, so then what's your experience with public donations? I remember when the Tax Cuts and Jobs Act came out, there was this theory that donations were going to dry up, especially grassroots small donors, because they changed the level of standard deduction. Being able to itemize deductions were going to be more restrictive. About 90% of the people who file individual returns don't use the Schedule A. And the theory was, well, we're not going to, no more donations. Has that happened yet? Have you seen this in 6 years then? I have. So then, so I decided, well, I'm going to look this up. In 2021, giving by individuals increased by 4.9% over 2020. Okay. And that's fully into limitation. Now, that's a COVID year, right? Maybe that's part of it. Now, 2022 was a down year for individual donations. They had 4 in the last 40 years. 87 was one. What happened in 87?
Crash.
Stock market crash. Yeah, well, it's kind of late in the year, in October. But maybe a lot of people do late year-end donations. The crash in the stock market. 08 and 09, what else? Crash. Real estate market. So there's a trend here. Why was 2022 down? Sort of crash. Somewhere it was down somewhat.
Probably
Yeah.
competing costs with COVID.
Yeah, I think that people are, could be, and inflation would be definitely a part of it. And I think that people are now spending, having to spend money on food and rent and everything else. Right, slightly less in donations in 22. Be anxious to see how 23 shakes out.
We've already had 2 grants that we would generally get every year tell us they're not granting this year. Probably just
Yeah, and so I think it's more, so I think the takeaway is it's more about economics than it is about charitable motivations. People are going to give anyway, deductible or not. Now, as a CPA, I find it a whole lot hard to believe.
Did you see, for the people you audit, did you see a difference when, during the COVID years, every dollar counted? As opposed, I understand now we're back to like individual gifts over 250.
The itemized deductions.
Yeah, I'm not, so I'm doing really nonprofit audits right now.
Well, I was thinking individual audits.
Oh.
Because during COVID years, everything I personally donated, every dollar counted. Whereas now it's back to, you have to make a single gift over 250 for it to be tax deductible.
All right, so for a couple of years there, they carved out like $300 and $600. You could do quote above the line, right? You didn't have to itemize to do it. And that ended last year. I didn't see a lot of movement in those. My clients donate because they care about the organizations. I don't think they're doing it because I know some of them are doing $300 here, $600 there, because they knew they could take it. But and some of my clients, I can't figure it out here. I have some folks who make modest incomes. Say make for our firm, $300,000 a year, giving $30,000, $40,000, tithing. And others who make 7 figures, and I can remember, they go, well, I gave $500 as well. They're like, charity starts at home.
Well, that's how they are making that much money. You don't get rich giving it away.
Giving it away, working for somebody else. Lots of, I have wealthy folks get a lot of money away. Trust me. But yeah, I can't always figure it out. But my feeling is that the motivations are altruistic, not about taxes, as much as I find that difficult to do. I think everything is motivated by money and taxes. Jaded. All right. Common tax issues. Failure to file the RRF-1. That happens. Your accountant can do that. They miss it. Why? Because they're not thinking of it. Now, tax software doesn't always. Your last back our tax software doesn't automatically e-file, so it can get missed. Now you can go online and e-file. Right? They now have an opportunity to do that.
You can only e-file if you've done the 990, the full 990. If you've done the 990N, you have to still turn in the TR1 form, and you cannot e-file those.
Okay.
And that is the biggest problem we have for people that ask for money from El Dorado Community Foundation. When I check, if you're eligible, the first thing I do is check the DOJ because that's what
Right.
almost everybody misses.
Right. Yeah,
And I do think it's because it's probably still only 10 years old that that form started to be required.
this sort of one. you're talking
And
about.
then I have another good
The RF's been
update.
required forever, but this sort of the one you're referring to. It's been
RF1.
The RFS one, though, has been required for a long time.
Yeah, a long time, but probably only 10, maybe 15 years now. But I mean, I know the year it came, I happened to be a PTA president of all things.
Yeah.
But, so, and the update, I found out that you can tell other people, I mean, no guarantees, but, you know, they're months behind. So people file a form and they say, oh, but we filed it, but, you know, we're not allowed to accept it until it shows on the DOJ website. But the way to get instantaneous update on the DOJ website is to take it in personally.
And
I'm
yeah.
3 for 3 now. 3 nonprofits that were behind walked in with it and left, and on the website it showed current.
Yeah, they're good at
What did
updating.
you walk in?
Yeah.
The state down in Sacramento, I did, they did. They walked into the Sacramento DOJ office.
Wow.
No appointment, nothing.
Yeah, it's nice. Yeah, I've seen where like grants have gotten held up. Big dollar because someone didn't file their RF1.
We won't
And
have
they go
it
down
at all.
and yeah, that's a good idea. That seems to be a little heavy-handed, but you can get that fixed very quickly, but you got to do it.
You can get it fixed very quickly if it's a 1-year problem. The problem is a lot of people haven't done it for 5 years, and then they make you do all 5 years worth and pay the fees.
Right. Yeah.
So,
Don't fall behind. It's a takeaway. Yeah. Check that. Check to see if it's been filed. You can get online pretty quickly and find it, right? So you can check on yourselves. All right. Updating disclosures of programs and incomplete narratives. Have things evolved and changed with your nonprofit that should be disclosed? Okay. I got a call yesterday for a client that does, it was supporting youth sports. It's fairly vague, and there was a bunch of MMA folks put this together. That's my same room, sorry. But now they're pivoting to setting a bunch of wrestling programs for high schools and high. So now they're going to fold that into this nonprofit, updating the narratives of what they're doing. Incredible, right? Inaccurate compensation to officers' disclosures or employees. You mentioned already that that's the first place they'll go to when they look at your 990. I guarantee you they will. Misclassification of functions. UBI, possibly. Failure to report diversion of assets. If you've got an investment, it goes on return.
can I ask where it says failure to update, like board member lists? With whom?
On the tax return.
Only the, on the tax return and on the statement of information?
That's something also. That's your statement of information should update that. Absolutely.
But not something separate.
Right, but your 990
Yes.
also has that list of board members. And there you should list everyone who was a board member during that final year. List them all. Between if it's a calendar year end, anyone from January 1st to December 31st, whoever was on the board, list them. Okay. Another one is not filing 1099s. Get this out to the contractors. You're still required to file a 1099 NEC. All right. Failure to complete Schedule B. That's where you've got donors of at least 5,000. And then Schedule M is where you've got non-cash donations by category moving 25,000. That has to be reported also. That gets missed. Counts miss that one. Right. And failure to adjust for the 990 for donated services or use of facilities. Now, what if someone donates their time to your organization? Do you have to report that?
I have another question. I know we have a few that are still filling out the postcard, and I have a new nonprofit that, I mean, I don't fill out any schedules, but what if I have a non-cash, like an in-kind donation, like use of facility? The 990N doesn't ask me about that. It asks me if I made less than $50,000 on an average over 3 years. Is that okay?
I don't know. That's a great question. I don't feel it's going to be 990Ns. When the organization has less than 50,000 of those receipts, where you've got donations.
Well, what I'm
to use of
saying is that
facilities.
in-kind donation bumped me over 50,000?
It may it would likely bump you into filing the 990. So I could see where you've got disclosures that are not part of the 990N, now bumps you into filing the 990. That absolutely could happen.
We could set a rental at $1.
Thank you.
Don't fear the 990. It's not that bad.
No, I know, but I mean, if I don't have to fill it out, it's brand new, and I know there's a lot. I mean, Harold does 4 months of business of what, $10,000 a year?
Less, yeah.
Less, right? I mean, that'd be brutal.
Those are important dollars.
They are very important dollars, but what I'm saying is to go sit instead of a 2-minute postcard,
Yeah.
that's a lot more work.
So then the cost benefit analysis there is it worth the rental of facilities for the extra work?
Well, if rent's $1 a month, it's all good.
But if it's adding the additional compliance requirement, then maybe you don't get the dollar.
Costs
Right.
associated, because we don't charge rent.
But then we worry about the rent, right, the other side.
Your donation value is zero,
The rent for the person.
because we don't rent it out to
Wait, what's that?
So we talked about how the rent also needs to be filed.
Oh, right, yeah.
That's what.
All right, we're getting one more point. Oh, in my head, sorry. All right, anything else in 990s you guys see or issues? On your own, for your own?
Do you need it publicly posted?
You're supposed to provide it if asked for.
Okay.
I don't know if there's a requirement to publicly post it,
Okay.
but like, I think, is it GuideStar? I think has agreements with the IRS to get it.
But
Right,
does it
'cause
have
anyone
to be
can
on
request
our
it.
website or anything like that?
Does it have to be? I don't know where it has to be. You guys know? If the 990 has to be publicly posted?
Well,
It just has to be
they're very-
available
no,
for
it
the
does-
public if they ask for it.
We do, but I know GuideStar gets way far behind. Like, I'm not a GuideStar fan, I don't live there.
Right.
There's some
I just
things
go
like
on
the
the IRS
IRS
site, which is also way far behind, but.
If you're,
Right.
they won't
It could take-
approve you unless you have it publicly available on your website.
It's a good best practice. to have
Right.
this.
It's not
It's not
mandated.
Yeah.
It's just best
It's-
practice.
Yeah.
Right, for
Good
us
practice.
as a foundation, because we're accredited as part of our accreditation
Yeah.
standard, that we post them on our website.
Yeah, there's no reason not to. I don't know what you're hiding. And the
It's
people
more
are,
just making sure you're on top of it.
yeah, that's me, yeah, one more thing to check.
We did have an occurrence where we had a donor, as part of your 990 is for a Brady nonprofit, is a list of the donors. So donors are gonna be listed above a certain dollar amount.
5,000.
Right, they're listed in there. A donor called and said, I would like that list. I called the auditor and he said, well, she can ask for it, but she's not obligated to do it. All you're obligated to provide is the public component of the 990.
Right.
Which is what we provided to her. But she wanted to see the whole donor list and the auditor said, no, you're not obligated.
We redact.
Yeah, that's a good point, because some schedules are not required to post.
Right.
And that's one of them, that's right.
We had a donor ask us to put our EIN on our website. And truthfully, I wasn't opposed to it. The only reason we did not put it on there was for fraudulent reasons. And I didn't want people to be able to just pull our EIN
It's-
off our
It's
website.
available on the government website. You can get it
Yeah,
on the
they can
IRS
easily
website.
pull
So
your
it's-
EIN.
You should be
Ours is
including
posted.
your EIN on your grant, on your donor
Yes.
acknowledgement.
We do.
letters.
Yep, everyone.
So it's out
I
there.
put it on our website because like Chris said, you can pull that anywhere.
It's best
I can
practice to
Google
have
Boys
it.
and Girls
It's
Club
not hard to
and
find, yeah.
get it on Secretary of State. I can Google probably on the Google search engine if I put in EIN.
Why don't you find her EIN right now, with her?
She's gonna
She's
Yeah,
got
by the way, it's not
she's got it on
important.
every grant application.
And then text it to all of us.
Just don't be late on filing it, the penalties are severe, you usually get them waived, it's a headache, right? Don't be late, don't fall behind filing.
We have to get the extension every year.
Don't fear the extension, your accountant appreciates it. They're tired at night, they've just gone through a busy tax season. So if it can be delayed, I filed a personal extension every year since 1989, or 92, whatever it is. Don't fear the extension, you want to have good work done, it takes extra time, so be it. As long as it's not late, and you don't want people getting your accounts getting to you on November 14th, right? That's a bad sign. Give me 1 day to review. It's one thing to back burner something, it's one thing to keep it to the last minute. That was something I would get very upset with my accountant. All right. The donations of property, anything in excess of 5,000 requires a contemporaneous appraisal from a qualified appraiser. Now, I've listed a case here for Mohammed versus Commissioner. I know who this person is. And I know the attorneys who worked on the case. They defended this guy. And he was a real estate professional, a broker, a developer. I mean, he knows real estate inside and out. Right? He had a very large travel trust, which was around 18 million. And he did his own appraisal and signed his own documentation for it. And he got audited. The IRS said, well, you didn't provide a qualified appraisal from a qualified appraiser. He was, well, show me someone who has better credentials than I did. And I intentionally valued this about $1 million less than its actual value. And the IRS didn't challenge the value, but they still denied the deduction in court. the reason why is because it didn't meet the rule of getting a contemporaneous appraisal from a qualified appraiser, someone who's independent of the person who's donating. It didn't meet the standard. Painful case. The dollar amounts were right, met all the other requirements, right? Just didn't provide what was appropriate to support the donation. And you guys get copies of the appraisals when people donate property to your organizations? Do you guys get the appraisals from those who donate property to your
Yes.
organizations?
Yes.
Do you?
We never have property.
And it's a good idea to do so.
Was property,
We got it both.
Anything more than
We got the
5,000 requires an
independent
appraisal.
oh, thought it would be property.
Is it worth more than 5,000?
Oh, yeah.
Was
Then-
it appraised by somebody that specializes in what appraisal?
Then that's what you need to do. And there's folks who appraise anything and everything that's in play. You would need a rare book appraisal. Right? There are a couple $100,000 in rare books. They were buying out the bookstore and turning it into, I think, a cannabis dispensary. Right? They would have no use for the books, they would have done it, but they needed a qualified appraisal for it. It's a limited market of qualified appraisers for rare books, and they're an interesting breed. We found someone. We sifted through all the issues and we got them to do their appraisal.
We have one that is even better. Find somebody that's qualified appraiser in stained glass.
Oh, right. High
Yeah,
school.
we had to fly him in from San Diego.
I can see that.
San Diego,
There's a
Spain,
few
or
more
San Diego,
in the UK.
California?
San Diego, California.
It's a pretty limited market, yeah.
Yeah.
Yeah, it can be very niche, but you'll find an appraiser for anything and everything at some point eventually. So get a qualified appraisal and get copies of those, okay? What about cryptocurrencies? Anyone had a donation of crypto? It's not a security. So they donate stock, they donate Apple or Amazon. There's no requirement to get an appraisal. It's easily determined what the value is. Cryptocurrency is not a security. It's property. And when someone donates a Bitcoin, that even appraised. You need a contemporaneous appraisal for it.
I wouldn't accept cryptocurrency.
Really?
Because I get it's like stock. It's worth what people are willing to pay for it. But
You just catch
is
up.
it actually legal?
Well, it depends what you're using it for, I suppose. Yeah, it's absolutely legal, and it has a market for it, right? Now, some of these are some obscure cryptocurrencies people are trying to come up with, right? I think that's a great idea. You can come up with your own coin and watch it go up in value. That's fantastic. But established coins like Bitcoin, why would you not take it? It has a value. Take it and sell it. Now, if your investment policy is to invest in Bitcoin, I think you're going down a bad path, right? That's still not, it's still speculative in my opinion. If you're going to keep the coins, that's different. If you're going to put it in a wallet and lose the password, that's different also. That guy right in the Bay Area has got millions, 250 million in crypto, I can't get this. He's down to his last 2 tries. He has 10 tries. What do you guys reckon? It's a few years ago?
Yes, I did.
Yeah, he's down to his last 2. Why 2? Why not just do the last 1?
Why didn't you write it down?
Yeah, that's a great question. I bet he's never heard of it. Well, that's from his spouse. What were you thinking? Anyway,
Silicon Valley Community Foundation has over $1 billion in cryptocurrency,
I can believe that.
yeah.
and a lot of it's restricted.
So do they keep that as crypto, or do they then divest that and turn it into cash and invest it?
They're required to keep it as crypto.
Really? That's sketchy.
Yeah.
Sorry, I don't normally do this. My daughter came with me. And she's... What's that? Yeah, no interest in coming here, so. Making sure she's okay. Anyway, my point was, if you get crypto, I don't know why you wouldn't take it. I think you should get an appraisal to support the value and then sell it. Okay. All right. Cost accounting. Take the best for last, right? So it's like it's going up the steps, right? More interest, right? Internal control, taxes, now cost accounting. All right. So cost accounting, allocation of direct and indirect costs is now part of the whole process of financial reporting. It's necessary for your audit. It's part of your tax return. And it's a challenge for everyone, right? How do you allocate costs to your different functions? Whether it's programs, fundraising, general administrative, identifying your functions and allocating your natural costs as functions is a challenge, and then maintaining the records for it. Right? So functional expenses deal with why they were incurred. And the gap categories are program services, management in general, fundraising, and then membership development to the extent you have it. And then natural expenses deal with what was incurred, salaries, rents, supplies. Okay, those are your natural categories of expenses. And we talked about whether it was office supplies or office expense, I don't care. I just want to know that you're doing it the same vendor gets allocated the same category each time. Don't start mixing them up. We understand what program services are. Right? They serve the exempt purpose of the organization. They're activities that result in distribution of goods and services to beneficiaries, members, or customers. A basic example of what a program service is. And you guys know what they are. Right? And you kind of know what management in general is. It's the administration of the organization. It's the have-tos. What's a good example of a direct cost that's administrative? Just demonstrate.
Your bookkeeping.
Okay. You're a bookkeeper. All right, we'll go with that. I'm going to go with CPA. But yeah, you're an accountant, right? You're certainly your independent accountant. This is administration, period. Right? We're not part of programs. We're not part of fundraising. We're completely administration. We're a direct cost to the management and general function. So you may have, what are some of your direct costs or solely direct costs in any programs? What programs do you guys run? You have
QuickBooks.
But you have QuickBooks.
And
is-
databases,
What's that?
donor databases,
Okay.
or would that be fundraising?
Well,
I'm
I think-
referring to the programs you provide.
I'm referring to any costs that you look at in terms of the natural allocation and say, this was solely for programs.
Oh, the salary of the program leader.
Right, that's a great example. So you got a program leader, their salaries are 100% allocated. They're a direct cost for that program.
Program supplies,
Program supplies, specifically for it. What's that?
gas to drive the kids to the program.
If you've got a program with kids, all the delivery of said individuals, the costs associated with that, but that's all it's dedicated to. It's a direct cost program. Right? Easily identified. That's part of your account. We've identified it as a direct cost. Now, this whole concept of direct costs, indirect cost allocations, the sooner you, in the process, you can make those determinations and allocations within your accounting, the easier your life is going to be. It's not good to go back later and figure stuff out unless you're correcting an obvious error. Right? And to be more involved in that process early on, and create fewer headaches for you moving forward. What about fundraising costs? When you think about direct costs of fundraising, you directly pay a fundraiser? What do you want? Anything else?
Event membership.
Could be. Yeah, and they make some distinctions with fundraising where it kind of has to be the sole cost for it, be part of fundraising expenses. Right? And I don't think any of you probably have membership development costs.
I have a question about that one, because we do have members, we're a membership
You're okay,
organization.
yeah.
And this did not come up in our list of functional expenses last year in our audit.
Talk to your auditor.
We don't really solicit, we don't mark it because we don't have to. However, there are quite a few things we do around communicate, like we have a whole marketing and communications person who is doing newsletters to parents and social media and all that good stuff. Would they be membership or would they be program?
It says it's membership donor membership.
If you're a membership organization, where you've got members of the
And we have members who pay fees,
that pay a
essentially.
membership fee. They said you have membership development costs specifically for them. And this cost involves soliciting members. Right?
Because some donor organizations will call, or a nonprofit will call a donor a member. Like
Right.
Millie.
That's nomenclature that you have to be careful on.
That's-
But one has membership fees, right?
Okay, you're talking about
We're
membership fees.
definitely a
Okay.
membership
Yeah, they are,
organization.
sure.
Yeah,
So,
that's a good point, thank you.
Our
Yeah.
membership services manager, who makes sure all the parents pay and does all the enrollment and all that kind of thing, is she a membership development cost or is she a program cost?
Throw it back to you, what do you think?
Well, I've always
I'm not
put
boots on the
her-
ground there.
I've always put her to programming.
Yeah, it sounds more like a program than me. And some of these nuances are challenging, and I'll grant you that. But there, you have to make a decision on that. And talk to your auditor. You've got membership, you've got members, and there's a good chance you have membership development costs. Find out what those allocations might look like. If they're material, if they're not, then don't do it.
It's
immaterial,
membership,
don't worry about it.
soliciting would be marketing, right?
I would think so, yeah. Yeah, development, yeah, exactly. All right, in my examples, I don't have that as a category, because most times I don't get a yes on that. So direct costs are clearly identified with or directly related to a single objective or purpose. There's no issues with those kind of cost allocations. We went through what that would look like. Which ones are actually direct costs. Okay? Indirect costs cannot be specifically identified with or directly related to a single objective or purpose. Those are the ones that have a challenge. Now, how do you guys allocate indirect costs? How would you? Percentage of what?
What was directly provided?
Okay.
Some grants
Can
just say
you
10%.
go back?
from,
Right.
I say that.
10% of your.
The grant. So you just allocate.
So there's an issue we were discussing of how to allocate overall indirect costs to a grant program. Right? That's what you're talking about. Yeah. And so that's maybe something slightly different.
Okay.
Where you're saying that we're meeting our spending goal, and they'll say, well, you can allocate direct costs to the grant, and we'll limit you to 10%, right, of indirect. And that's fairly common. I've seen that more also in the private sector. And it seems like with federal,
Or federal, yeah.
federal grants were, it seemed like we had a very complicated process coming from the overhead allocation percentage, and I worked on it. My class got an $8 million healthcare innovation award to set up a telemedicine company back in 2012. We had all the CFO work for it, and I helped them do their indirect cost allocation. Then it went to, remember back then they went to the Supreme Court, whether or not it was constitutional to have the Affordable Care Act. Their $8 million startup grant was like a penny in a cent.
Oh my gosh.
How do you know? It passed it. They got their income. Anyway, that was the issue of how to allocate indirect costs to grants. I know for federal grants, you come up with your indirect allocation percentage. We had to send all kinds of reports. All right, well, let's talk about indirect cost methods. So I've got the same functional expense report I showed you previously. I had the subtotal of programs. I've got a summarized total of management in general and fundraising. And I've identified in the first three columns on the left-hand side what are the direct costs. Okay? So I know what portion of salary is part of management, solely developed to management, what portion is allocated to fundraising directly. Those are easily identified. What about your indirect costs? How would you allocate indirect costs in terms of compensation? Right at 160,000 of salaries, but I only had 85,000 of allocations. Yeah. How do I allocate the other 75,000?
Based on the percentage of the direct cost.
I could do that. So that's one way. The idea was allocating based on the already allocated percentage of direct costs. And that's not a bad idea. I like that. What else could be?
How to set allocation identified.
What about the time spent? Right. Do anyone do time studies for employees? Track their time?
My auditor said I had to do one for me.
You don't sound like you want to do it.
No.
Well, I don't blame you. It's a massive headache, right?
Well, it's completely different every day and every week as to whether this is a big fundraising week, or this is a grant writing week, or this is to drive the kids around.
See, that's why I got out of it. That's why I stopped doing audits. Because nobody likes you. Right? they tell you that. Yeah? They make life hard on you purposely.
But
And for
I
good
know there's
reason.
organizations that, yeah, you have to allocate to like 20 different categories, and that's what you do.
As someone who has maintained his time at increments of 0.1 for 35 years, I have no sympathy for you. That's how we bill. We sell our time and talent based on our allocation of time. I've been out time sheets for 37 years.
Do you like
So
start a clock and then stop a clock?
Sometimes I do. Stop watching like LA Law. No, I try to keep. If you fall behind a day or two, you can't get it. You just do it. And I put the hammer down anyone who doesn't. Anyway, time studies is one way. Just simply allocating by what the direct cost allocations were, that's how you allocate the indirect costs, that's perfectly fine. Can you do it based on square footage? Maybe on salaries, maybe more complicated. You could do square footage for occupancy, for rent, right? How you've got specific areas dedicated to the program. You could allocate to based on square footage. Okay. Documenting that's going to be important. Your auditor is going to know that. It supports your statement of functional expenses. It supports what you're putting on the audit and tax return. Okay.
So can we go back to that? So why wouldn't you have more under occupancy under program there?
I don't know if that made up the numbers.
That's a great answer.
It was late, and I want to get.
Somewhere?
What's that?
Wouldn't the program need to be somewhere?
Could be. What if it's outside somewhere? Could be. Right, and that's a good point. So then, and then if you're doing a sanity check on the allocations, and this is all just examples I pulled together, you're right, it could absolutely be. And then maybe I then would allocate the indirect this way, right? So now we've got.
Exactly.
Now it's a little more robust, right? So then you said I didn't have any direct. I couldn't figure out how to do the direct the occupancy allocation. So then I rolled in and said, well, let's do it this way. Okay. So I am actually allocating it based on square footage. Okay. But now I'm pulling together my total cost of $415,000. I had $242,000 of direct costs and $173,000 of indirect. Okay. So I used my methods for allocation that I came up with, and these are the dollars that actually came out. So
So we're strictly fundraising. Do we just have direct costs then?
your organization just does fundraising. Then it sounds like you would, yeah.
Okay. Good, because we don't have.
What do you do with fundraising? Are you leaving? So,
I have to admit, I'm really struggling to think what would be an indirect cost for us.
mhm. What about your accountant? Your CPA did your audit.
That, but is that not?
Are they
part of my-
fundraising or are they programs?
Well, I would say they're management
What about
costs.
management?
Okay.
Are they-
Well, I guess that's true. I guess, okay, your accountant is a direct cost of management, that's right. Your rent,
Why, a pen program?
what's that?
Rent is indirect, you say?
Well, rent would surely be programming.
Who would be-
expense.
what about
Is it
like
only
insurance? So
program
there's
expense?
also housing.
Well, isn't that where we're
administrative
doing our
and
program?
Well, where do you keep your general administrative costs?
There
Same
too,
building.
but that's management.
So I've heard this overhead before, the indirect costs, right? Is this weird?
Insurance, I could see over.
Yeah.
But surely, for us, insurance is a vital part of programming. We can't actually operate without insurance according to our membership agreement.
Right.
That's-
Yeah, I
that
know,
would
I'm
be a
trying to
direct
figure, I'm
cost.
just throwing words out there.
What
Sound
about-
indirect.
What about your D&O? Is that a direct cost or is that?
Director and officer insurance.
I would say
That would
that's
be, I would say
management
it's
costs.
an indirect.
Right, so it's kind of the
It's not-
administrative stuff
It's
is
administrative.
indirect,
Right.
right? And then the
Then why do we have
program.
management, then what is, okay, then I don't understand what administrative versus management is.
Well, it's if you are employed full-time and compensated by the organization, you would be direct. If you're not, that's indirect.
Or like IT support?
I would say that's a programming thing.
If you're only,
Just can't operate without internet.
So
Well, I think you could make that argument with every expense.
like every
Like, you can't
expense,
operate without workers' comp, but also it could
How does this
spread
work
out
different than
over a bunch of
overhead?
different programs.
I mean, am
so
I
the concept of
missing
indirect
this?
costs is it can't be identified with or directly related to a single objective or purpose. You can't think of a single expense that that has no specific purpose related to direct costs.
Buying the staff birthday cards.
What'd you say?
is that like a gift
Staff
card?
recognition.
Buying,
Staff
no gift card, just birthday card.
Okay.
You'll write nice messages. But I would also argue that's positive work environment.
Absolutely.
At the end of
And
the
maybe it's not as much of a challenge for you guys to allocate costs, right? And then maybe we're getting all hung up on the nomenclature here. It's more about how you're allocating any of your costs amongst programs or administrator or fundraising, but they're not specifically identified for those to begin with. right? Your CPA is not, let's say you have an on-staff accountant. They're not hired to just do the programs, right? So how are you allocating their time amongst those? And maybe you want to call them direct costs, and I'm fine with that. But how are you allocating them if they're not specifically dedicated to that function?
Is it bad, like let's say I do this and get it wrong, I can't imagine that happening, but okay, if I get it wrong, as long as I always get it wrong, is it kind of like you said?
You're consistently making
Always
mistakes.
indirect costs.
And wrong the same way.
Yeah.
Always right, like, I mean, I always, let's say I put accounting down as an indirect cost, not under management. As long as it's always there, is that gonna be easy? Or do I need to, like, you know, it sounds like it's like, well, if you can justify it, yes.
I guess if you're identifying someone who's a program accountant, I guess that'd be program services.
But
It
look,
seems to me
you know,
that's
I meant like
management.
accounting is put up there as management, right? Direct costs, sorry, the last one you were just on, no, not that one. It just said accounting is a direct cost.
It is a direct cost.
Under management. So what if
Right.
I put accounting down as an indirect cost because,
But isn't it always management? Why would you, I guess you have a program accountant. That could be different, right?
or what if I took services outside of like LTCC? She said their accountant is off-site.
Uh-huh.
It's not, he's got 72 other jobs. Isn't he in, I don't know.
A clear example would be as a foundation, we own our building.
Right.
So the expenses that we pay for upkeep of the building would be an indirect cost. It
Right.
really doesn't have anything to do.
I guess I'm asking about the not clear ones, so. Like,
Of
how
course
do
you are.
But that's what I want to know. Like, but like, is it important to make sure you're right, like whoever's version of right is, or is it important that you justify however you've defined it?
I think justifying how you define it. Right? And then to the extent you're allocating costs to general administrative, it's reflective of someone evaluating an organization and whether or not they think they're efficient. Right? So if you're allocating them to different functions, like programs or fundraising, that's a view different.
So you're asking about percentages, you were asking about administrative, you weren't asking about indirect costs.
Well, it gets-
Because I thought you were asking about how much percentage should be indirect costs.
Well, I'm asking, how are you allocating costs that aren't already directly allocated? Right? And, or if you got something you specifically identify, how are you then identifying those against all the programs? That's how I was looking at it. Rent's a great example of how you identifying, and Kathy, that's kind of what you're putting out here, how are you putting it to programs? How do you
And
know how
also
much
see
you're allocating?
medical insurance be allocated to indirect costs for, for interact required.
Now,
by
I just
employee.
quickly solved
I'm
that.
just thinking of these different places that I've seen. in the
Well, we're
past.
trying to allocate them to
Not
a
here.
function, is the issue,
Yeah.
right? So which function do they apply to? That's the challenge. You've got some that you can identify to a function pretty easily, and others you can't.
See how benefits could be indirect.
Because it was like
What's that?
benefits, it was
Is that
rent,
obvious?
even though on program facility, we have an administration, like I've seen it done that way, and like insurance, all those things.
I'm sorry, say that again?
Oh, I was thinking about in another organization I worked for, you know, a lot of indirect costs were like for the rent where the programs didn't take place, the benefits, it's just off workers' compensation, insurance, all those things. But then when it got complex, at least I felt.
Because you're allocating this to a function.
They were then doing the percentage of the employee
Mhm.
who received each of those indirect costs.
Yeah,
Based on time, right?
yeah.
Right.
Yeah, so doing time steps, that's why they're asking for it. How are you allocating this amongst these functions based on the employees? Right? And for those who aren't easily identified to one particular function or another.
And that's because I can't say I just do management, I'm also involved in programming, I'm also involved in fundraising. And I could.
And how are you allocating that time?
Well, this I can give them a good answer,
You could not.
because I swear I do it all at the same time, all the time.
There's 100% of all your time to all functions, right?
Like, what is
And now you call it how I build.
I mean,
The same hour gets billed with 3 different clients.
Well, there you go, that's a problem.
26 billable hours a day.
So the question is, at the end of the day, like, when you choose to allocate all of this, that's not like an audit. Like, then you're not going to get, IRS is not going to come in and drill down to say your allocations were correct or incorrect, or
No,
like
they're
what-
going to say, do they seem reasonable?
Yeah.
They're really not going to challenge your allocation.
Okay.
And they kind of come out and said that.
They asked for our spreadsheet, our allocation spreadsheet, because we have each employee allocated across the different grants that they serve. But they didn't
The
ask me for
the
that
auditors
question.
asked for that, right?
Yeah, that was an audit.
Now, the IRS could ask for that. But they're really, at the end of the day, do they really care? Probably not, right?
Yeah.
They really don't. They're not gonna, I've never seen that.
I'm gonna go with that.
Now, the people who are evaluating the organization will care. They wanna know what you're allocating to general and administrative. So those allocations, time, important, and rent and whatever. But your accountant, the auditor is gonna care. They wanna know that you've got a rational and reasonable allocation of all your costs to all your functions. Functions being programs, general administrative, funders. How are you doing that? Some are easy to identify as direct, and some are not. And time studies are easy, but do you have to do a time study? I mean, you can do it based on historical knowledge of how they're allocating their time. I don't think you should. You could get totally hung up on spending a lot of time trying to meet some of these requirements when they're not changing much, right? As long as you're close. I hate to see it create this very complicated structure without a hundred of cost.
Well, I think you just look at it like, oh, you have 3 FTEs for this position, or 3 out of 12 are going to be towards programming, and so then you did the indirect stuff.
Right. And you allocate by program. In my original functional costs, I had multiple programs. Right? You figure out who's slotted in there. But then your executive director, how much time do they spend on programs?
Depends on the size of your organization, probably.
Right.
Really.
Depends how involved the executive director is,
And that's
right?
second.
And how you document that allocation.
I think this is really challenging, like the group that I'm looking at, because we're all, I mean, very tiny nonprofits to relatively small nonprofits, and this is really hard. Like I'm trying to, I don't know, I would almost have to do like a spreadsheet of those functions and start writing down my hours.
It might look like this.
Right.
So I'm
But
using
I
this
have
as a
to
start,
tally up
right?
my hours on which functions I'm doing. And I think a lot of EDs here are totally involved with programs.
Right. They spend 6 hours a day in programs, 12 hours a day administration, 4 hours a day in fundraising, 9 hours a day at home.
30 minutes a day,
Being a-
checking social media in the quiet room.
Right, that's 2 more hours. Yeah, it's 6 hours a day, 8 days a week. Absolutely. So anyway, this is just a sampling of how to allocate costs and not exactly allocated, specifically identified for functions. Remember, those are all columns or functions. Right? Don't get too hung up on direct and indirect. This is an allocate where you've got someone who does multiple functions, how to allocate. Right?